Officer Chris Whitty says a return to normality will happen in months, not years. Matt?
Let's take a look at European futures here. We started out, I think, with some pretty risk-off sentiment rolling in through Asia, but then we got kind of a mixed picture. And FTSE futures are unchanged here. DAX futures are still down, but only about 0.3%. They had been down more than 0.5% earlier. So, you know, maybe this buy the dip, everything rally will continue as soon as investors get a chance to jump in. Here's the global macro mover screen. The left-hand column is where we put the equity indexes, as you can see, and they pop up there as they start to trade. The IBEX in Madrid is down more than 0.5% right now, and the FTSE 100 in London is down about 0.25% at the moment. We do see the CAC opening down as well, 0.4%. So European markets are opening to the downside after a mixed session in Asia as traders weigh the implications of higher U.S. Treasury yields and President-elect Joe Biden's push for huge fiscal aid to fight the pandemic. Joining us now is Janet Henry, HSBC Global Chief Economist. What do you see, Janet, in terms of expectations seem to be now for rising inflation? We saw earlier a chart of the break-evens, which is now up over 2%. And we do see 10-year yields and 30-year yields rising, and the spread from the 2-year getting bigger.
I think in some ways it's inevitable. You know, in the short term, things are still looking very, very challenging. Even aside from the human tragedy, it's quite clear that various economies around the world have got off to 2021 on a very weak footing. Even parts of Asia on the back of a handful of cases, renewed restrictions in Australia. We've obviously had, you know, the renewed concerns of a rise in cases in China. We know what's happening in Europe. But with the expectation of the rollout of the vaccine and now this expectation of a bigger fiscal stimulus within a couple of months with the new Biden administration, we know that things really should be better over the course of the next 9 to 12 months. So the markets, as always, are anticipating this. We've got the commodity price inflation. We've got higher food price and energy price inflation coming through. At some point, the structural factors will come back into play. It's still quite challenging. We will need to see a bigger pickup in productivity growth. But all of that, together with the Fed's average inflation targeting, there is more inflation risk premium in the outlook for markets.
Right, and Janet, good morning to you. Happy New Year. How do you then read the latest comments from the Fed, given the role the Fed plays in Treasury markets these days, given what you've said there about what the Fed is doing at this point? We've had Fed comments on tapering in 2021. According to one piece of research I saw from Standard Chartered, they all look too similar and too concentrated to be ignored, as if the Fed is trying to give a message to the markets. How do you interpret what you're hearing from the Fed?
Well, I think what we've heard from the Fed over the course of the last few months is that they too are more optimistic about the outlook. But we heard from the last FOMC meeting that they also know there are some downside risks. And certainly our expectation is that there will be some scaling back, some degree of tapering in the second half of 2021. But what we've heard from the Fed, and we've heard it even more clearly from the likes of the ECB, is that they are not going to do anything to jeopardize the risk that a tightening in financial conditions could jeopardize the recovery just as it starts to gain momentum. So if it proves to be one of those occasions where the financial markets do the tightening, whether it's through a stronger dollar and or a rise in bond yields, I would expect that the rhetoric of the Fed would shift and would moderate. We get back to the whole idea of the Mervyn King Maradona effect. Let the markets do the work for you. And actually, if the markets start to do a bit too much tightening, then it will be back to the central bankers reassuring the markets that they're not going to allow a premature tightening of financial conditions. But I think there is a reason to expect a tapering in the second half of 2021.
Are the fiscal taps going to remain open, Janet? I mean, we talk about Biden wanting to spend trillions, get $2,000 checks into the hands of Americans. Is anything like that coming over here? Do you expect continued action like that in the Western world?
Well, I think in the US, I think there is a likelihood that those $600 checks probably are raised to about $2,000. Later on in the year, he'll hope to move on the infrastructure plan and such like. That could actually prove to be a bit more challenging. There will be an element of gridlock coming through. But elsewhere in the Western world, particularly in Europe, they're certainly not going to pull back too quickly. Some people are talking about the idea of austerity coming through in Europe pretty swiftly. We don't see that at this point. The fact is a lot of the stimulus that was delivered in the second half of, well, in 2020 will be impacting the economy in 2021, and we've got the recovery fund. It doesn't look like it's going to be on the scale of what we're likely to see belatedly now coming through in the US, but I still think the fiscal side of things will be supportive of growth across Europe in the course of 2021. Maybe later in the year there's a little bit more discussion about whether it's time to rein it in.
Janet, in terms of the US stimulus, the fiscal stimulus, what does the balance between the sort of Band-Aid, sticking plaster, short-term stimulus versus the longer-term infrastructure spend, what does the balance look like there? You referenced that maybe the infrastructure spend will be more difficult to achieve. Lots of investors talk to us about the investment opportunities they see there. So I'm interested in your thoughts.
Well, time will tell how the new administration operates and whether the incoming president can be as successful in working across parties as he was in the past when he was vice president. But we know that getting big infrastructure plans through the Senate can be quite challenging. So I think this will matter for medium-term growth. If the next round of fiscal stimulus is primarily about transfers, hopefully that will provide some near-term support. We've also got this accumulation of savings that could be run down and support near-term demand. But if we're ever going to get to a world of higher real rates, ultimately, whether that's in 2021, 2022 or 2023, we will need to see higher potential growth, higher productivity. And that's why we do need the higher infrastructure spend or indeed encouragement for higher business investment to be delivered. So even if they can't deliver as much on the infrastructure side, if they can provide other business incentives to encourage that private investment activity, they could get stronger productivity growth. So there's quite a lot that markets have to consider, both the short-term stimulus, the direct payments, versus the longer-term impact on growth that probably isn't going to come from just more direct payments to households.
All right, Janet, we're going to keep you with us. We got a lot more to discuss with you. Janet Henry is HSBC's global chief economist. We touched on what's happening in the U.S. there. Donald Trump is set for a turbulent last week in office. Nancy Pelosi says the U.S. House will vote to impeach him for a second time unless Mike Pence removes the president from office by invoking the 25th Amendment. And that's something that he has privately dismissed as unfeasible. Joining us now is Bloomberg's Bruce Einhorn to discuss this further. Bruce, I wonder if there's time to do this. I mean, there's only 9 days left. They have to get it through Congress, which seems much easier than getting it through the Senate. And do they have to do it before he's out of office?
No, they don't. And I think that is what Nancy Pelosi is counting on. the way impeachment works in America, the House votes to impeach, the Senate then has to have a trial and convict. The House does not have to send the case over to the Senate right away. So the House could vote to impeach now, hold on to it, wait until Chuck Schumer becomes majority leader, which will be a couple weeks from now once the two senators from Georgia get seated. Then perhaps wait a little bit longer, allow Biden to get some of his cabinet members confirmed, some other things done in the Senate, and then they could pick up the impeachment trial. It could be, much later. It would therefore keep President Trump a little bit on edge because he won't know what's going to happen next, and it could help the Democrats accomplish one of their goals, which is they want to figure out a way to not necessarily remove him now, since that's unlikely, but prevent him from serving as president again. Because once you're impeached, you're not allowed to hold high office.
So this is very much about what happens in 2024 then, Bruce. What about the technology that he has at his disposal? Of course, he's been cut off from a number of platforms where he's not able to broadcast himself, if you like, at this point. What's the latest on that?
So he is no longer allowed to tweet. He's, at least through the end of his term, not allowed to be on Facebook or Instagram. And there are other social media platforms that also have cut him off. That said, he is the President of the United States. The President of the United States has other ways of communicating. He doesn't have to rely just on social media. So even though Twitter has been the President's favorite platform for a long time, it's not as if he's being muzzled.
All right, Bruce, thanks very much. Bruce Einhorn there talking about President Trump and what to expect. And I'll give you a quick PSA as well. There are some right-wing social media platforms like Gab in the U.S. One is called Parler, just Parler, not Parlay, as you might expect from this continent, but Parler. Coming up, top American banks remove hundreds of structured products in Hong Kong in response to U.S. restrictions. But is China still a good destination for investment? We'll discuss that next. This is Bloomberg.
decoupling actually benefit both the Asia. There will be a larger number of Chinese companies seeking domestic IPOs as well as IPOs in Hong Kong.
Whether 8 or 9 is going to be very strong recovery led by consumption and exports. I think our call is also that given such a background, we think policies are going to normalize in China.
The U.S. has been the center of the international financial system, so I would feel very upset if decoupling continues.
Policy probably will not be as loose, so interest rate will stay relatively high, and that's good for banks' net interest margin.
Just some of the guests there at the UBS Greater China Conference in Shanghai speaking to Bloomberg about policy and the outlook for overseas investments in China. These comments come as China continues its pushback against US sanctions, issuing new rules to protect its firms from, quote, unjustified foreign laws. 3 top American banks are set to remove Hong Kong-listed products because of US sanctions on the city. Janet Henry, HSBC Global Chief Economist, is still with us. So let's look at the underlying Chinese growth story, Janet, how quickly it's rebounding, and who is that helping? Are you focused on the knock-on effects in Asia or the way that Europe maybe benefits?
Well, China was first into the pandemic. It's come out first. It's had one of the strongest recoveries on our forecast in 2021. It will still be one of the most rapidly growing economies in the world. But even in China, I think the best of the initial bounce has now actually passed. We'll probably get a Q1 GDP figure that we're up about 18% year on year on our forecast, but a lot of that obviously reflects base effects. But as 2021 evolves, I think it's going to be different countries potentially that benefit. On the initial rebound, it was a lot of those countries that supply some of the inputs for perhaps the consumer electronics that led a lot of the export recovery, or maybe even the PPE equipment, the medical rollout, and a lot of the construction and infrastructure spending, which pushed up a lot of the commodity prices. I think probably from here, the next impetus will be much more about China's manufacturing recovery and the capex related to that. So whereas perhaps Vietnam and maybe Korea benefited from the first wave, the next one perhaps it's Japan and Germany being more capital goods, heavy capital goods, manufacturing related investment that benefit more from the next wave of the expansion in China through the course of 2021.
How important is, the rule of law is key for investors and I guess for economic growth as well as is consistency. Do you see that, especially the latter in China, Janet?
I think it's quite clear from, for instance, the foreign direct investment data over the course of the last couple of years that, especially when you look at the US-China bilateral relationship, is that US FDI into China has held up a lot better than Chinese investment into the US. And obviously, we've just had the signing of the European-China agreement on the investment side. Not that it's an enormous deal across a broad range of sectors, but it is signifying that there's still a lot of interest of Western companies to invest in the Chinese economy. And it is still one of the most rapidly growing economies in the world. It's still a very large market. And I think there is still an expectation that while there won't be a complete normalization in some of these relationships in the coming years, we might now be in for a year of a more stable and perhaps some clarity on where we go from here on the overall relationships. So I think for a lot of companies, it is that market offered by China and the whole of Asia that will still be interesting for them from a foreign direct investment perspective.
Could I ask, and clearly we focus on the US dollar as a reserve currency. We had a nice conversation last week about whether the yuan was going to take over in any sense. But from an economist perspective, what are you assuming on the dollar? Because last year, weakness in the dollar had been something of a consensus trade, certainly in the latter part of last year as the vaccines were introduced and investors felt comfortable taking risk elsewhere. And yet we've started this year with stocks rallying, risk assets rallying, and the dollar rallying as well. So what do you see from the dollar, Janet, and how does that influence your outlook?
Well, our currency strategists are forecasting a kind of sideways move in the US dollar for here, which is obviously a pretty good backdrop for a lot of the emerging economies and the emerging market currencies, although perhaps less helpful for Europe, given the challenges it faces with the disinflationary backdrop and now another leg down in European growth. So, yeah, our forecast is for a fairly stable dollar. But I think what we're seeing at the moment, although most economies have got off to a weaker start in early 2021, the expectation is, especially with the fiscal stimulus coming through in the US, is that perhaps the US might outperform. And therefore, even if you look at, our forecast, we expect the US to be back above the pre-pandemic levels of GDP by the end of 2021. But for Europe, we don't expect the Eurozone to get there until the end of 2022. So I think these relative growth expectations, both in the short term and over the more medium to long term, perhaps is leading to some kind of, reassessment of exactly where we are on the US dollar. We certainly don't think that US dollar's reserve currency status is at risk. It's been very much a cyclical story and still is, but we still think that the US position as a reserve currency is not at risk.
Janet Henry, HSBC Global Chief Economist, we appreciate your time this morning. Thanks very much for joining us. Have a great day. Janet's going to continue the conversation, by the way, with Anna and myself on Bloomberg Radio in just about 40 minutes' time. If you're in the city of London, definitely tune in on London DAB for that. If you're anywhere else in the world, you can just Google Bloomberg Radio. It's a cinch, I swear, and just click on Listen Live. Coming up, Market Mania, bubble warnings are starting to blare as retail investors flock to Bitcoin and bullish options. And maybe you get a buying opportunity if there's a dip here and there. This is Bloomberg.
Welcome back to the European Market Open Monday morning, 23 minutes into our trading session, and this is what we have across European equity markets. So we do see some losses coming through. US futures continue to point to the downside after the stellar week of gains for risk assets we saw last week. Maybe investors pausing for breath just a little. Now, everyone from retail newbies to institutional managers has been rushing to cash in on the 10-month-old melt-up. Once the market's most risky bets, things like Bitcoin and call options have taken off, prompting bubble warnings from every corner. Joining us now with the latest, Bloomberg's Danny Berger. Things look a little different this morning in that we see some investor taking risk off this morning, don't we, Danny? But what sort of warnings are we starting to hear then as we take into account the strong gains in risk assets from last week?
Well, it is interesting that what we're seeing decline things like Bitcoin today are these corners of the market that there's this concern of these speculative bubbles. And I think the concern, of course, is when you get these large rallies, you can have days like today or worse that you see big losses. Even the FCA releasing a statement warning about crypto investments, that there are a lot of risks that aren't necessarily acknowledged by those who give out these products and those who buy them as well. So we have these things like Bitcoin being one of them, call options. Last week, we saw the biggest day in terms of volume, the fourth and fifth biggest day in just 1 week alone. I should say all the other records came in just the few months prior to that. So you get this big rally to end 2020, and it just continues into 2021. You get tech. That's another corner where there's this fear, of course, and you have a lot of those names which are the day traders' favorites, for example, like Tesla, doing extremely well in there too. It's also just a strange environment where we're getting a lot of SPACs coming to market, and there was a SPAC that filed on Friday. Its ticker LMAO. I'm not sure what part of the market cycle that is when we get tickers like that, but it is just these corners, I should say, that people are warning about. The market overall, there is some more confidence that given the Fed is keeping rates low, that any of the sort of big dramatic events like we saw last week are being quickly brushed off. There's some hope that in general the market is healthy besides some of these bubbly corners.
You know, I remember when Barry Silbert and the Winklevi were the most famous Bitcoin investors, but we now see, you know, legendary names like Paul Tudor Jones involved in Bitcoin. So it's not just a Robin Hood rally anymore, right? I mean, institutional investors are getting into these pockets of the market.
I think that's completely right, Matt. It is really easy, I think, to look at these things and say, okay, it's all retail investors, but it can't be at this point anymore. And we hear, as you say, from different investors who are getting involved. Luthold Group, for example, one of their strategists said that this looks like a full-blown mania, and he followed that up by saying, hey, we're participating in it too. There are plenty of people chasing this momentum because if you were to bet against it, it would be painful. For example, a basket of the most shorted stocks rallied 10% last week, so it's hard to bet against these things.
Okay, Danny, thanks very much. Danny Berger with the latest on where we are on that market narrative. We are going to take a short break here on Bloomberg TV. When we come back, we'll get the view from Brussels. This is Bloomberg. welcome back to the European Market Open. 30 minutes into the first trading session of the week, and European equity markets moving to the downside, down by 0.4%. US futures continue to point lower, as we were saying earlier, maybe taking a pause for breath as we see plenty of headlines and stories across the Bloomberg written about whether we're in some kind of stock and risk asset mania, as we were discussing with Danny Berger a little while earlier. Let's get into some stock specifics, some movers for you. JD Sports is on the move. That particular stock moving up by 4.5% this morning. Earnings significantly ahead of market views for this particular retailer. TUI is falling after a 24% surge on Friday. You can see the stock now down by 7.2% in today's session. Total in the oil space buying the French biogas producer, or buying a French biogas producer in a push to become greener. That stock down by 1.4% this morning. Let us get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Senior Democrats say they'll move to impeach President Trump for the second time in just over a year, unless Vice President Mike Pence and the cabinet remove him using the 25th Amendment. House Speaker Nancy Pelosi says lawmakers will act with urgency after the storming of the U.S. Capitol by a pro-Trump mob. The UK says its coronavirus vaccine rollout will accelerate with the opening of 7 regional hubs at sports venues and conference centres. Health Secretary Matt Hancock says the country is on course to meet its target of more than 200,000 vaccinations every day. The total now stands at about 2 million. Air crash investigators in Indonesia have found the site where a Boeing passenger jet crashed into the Java Sea on Saturday. Data indicates it was still intact when it struck the water, reducing the likelihood of a terror attack. Teams are pulling up debris from the Boeing 737-500, a decades-old model that was carrying 62 people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. Now, many Fed presidents have been vocal on equality and diversity, both in the wider world and in their own profession. Cleveland Fed President Loretta Mester says the field of economics needs to be more diverse so it represents the public.
Economics is such an important field. I mean, it touches everyone's lives. You know, policymakers make policies that touch everyone's lives. You know, business people, you know, make hiring decisions that touches everyone's lives. So because it's such a broad field and it really is important for everyone, I think it's really important that we have a very diverse group of people going into economics. And, you know, I don't know how you feel, but my own feeling is that we could do better along those dimensions.
So much of it is also role modeling, and you know, it's great that young women now can look to yourself, can look to the likes of Janet Yellen and think, right, you know, there are roles at the very top for women in economics globally. Was that the case when you were going through and rising through the ranks? Did you have female role models that made you think, well, more is possible?
No, but I didn't feel a lack of it because I had a lot of men who helped me. You know what I mean? That's the other thing I think it's important to realize. We don't want to wait until it's diversified to say, okay, now we have role models. It's really important to get to that diversity phase. We're going to have to rely on men. We're going to have to rely on them to help women. And that's happening now. And that's the great thing. It's like you can just see it happening in the field, the AEA meetings, like the session that I was in, right? Some of the researchers doing this work are not all women. This is now broadening out. So there's a lot of males that are interested in diversifying the field too. And another reason that, you know, we really care is that if you want the field of economics to be growing and to be taking on new challenges and innovating and using new methods and interested in new questions, you need to have diversity in it, or else it's going to become a stagnant field and it could die out. I know that sounds silly, but you've seen that in other kinds of disciplines. And so it's really important that we not think of this as just women helping women. It's got to be everyone helping to diversify the field. And similarly with minorities, you know, we don't have very many African-American Black economists. They just, you know, they're just not going into the field, and we need to do better there as well. I think at the Fed, we have about 700 PhD economists, and we hire a lot more bachelor's and master's degrees. So we have a vested interest in making sure that the field's diverse because we represent the public. We work for the public, and it's really important that we have all views represented when we're evaluating what's appropriate policy. Okay. Just a diverse decision-making is much better decision-making.
That was Cleveland Fed President Loretta Mester talking to Kathleen Hayes. Now, take a look at what we're seeing in terms of stocks right now, 35 minutes into the session, and we've got the Stocks Europe 600, the broader European benchmark, down about 0.6%. Euro-dollar trading for about 122 right now. S&P futures are off after hitting a record high on Friday. It would make sense to take a little bit of a breather. Here at 37.92, you see futures down 0.2%. In the U.S., 10-year yield up above 1.1. Keep an eye on that. Coming up, the race to replace Angel Gurria is on. We'll speak next to Greece's candidate to be the next head of the OECD. The Brussels edition coming up. This is Bloomberg.
Welcome back to the European Market Open. Just coming up to 39 minutes into the European trading session. European equity markets down by 0.5% or so as we digest the gains, the record highs, the near record highs of global equity markets just last week. Now, 10 countries have nominated candidates looking to replace Secretary General Angel Gurria and take over the Organization for Economic Cooperation and Development, the OECD, with the US facing off against Sweden, Greece, Canada, among others. Maria Tadeo is covering this for us from Brussels, and she's talking to one of the candidates. Maria, good morning.
Yes, Anna, so the competition is on for the OECD top job, and we are joined by Anna Diamantopoulou, who is a great candidate. She's also, by the way, a former European Union commissioner. She's joining us on the phone. And Anna, you're in the running for this, and I guess the obvious question is, what do you bring to the table? How can you make the OECD still relevant?
Thank you. I think that we all understand that it's a very important organization since there are such a huge number of candidates which are involved, and it is a testimony that of the importance of the organization. Now, after the pandemic, OECD has to play a very important role at the global level and at the national level. What I believe it is very important for it is that OECD has to spread its standards to 2.5 more billion people in the next 5 years. And what I mean by that is that I think that if I get elected, I would pursue significantly much more attachment to programs and plans such as the Anti-Bribery Convention, the guidelines for declaration for investment, the OECD guidelines for the state-owned companies, etc. Why? Because I believe that this is a fundamental precondition for creating a level playing field. And a level playing field is a precondition for eliminating conflicts at the national level and the global economy at large. And then, since OECD is a pathfinder, a policy pathfinder at the same time, I believe that there are three major priorities: the digital transformation, the climate change, and the labor market. And there, OECD is very well placed to support and work with its members, the 38 after February members, to work on these very concrete areas.
Right, and you say you want to make a level playing field, but in the past few years, because of the Trump presidency, because of China too, we've seen that diverge. So can you bring in Joe Biden to the table at the same time and the Chinese?
I think this is one of the biggest challenges, and we have what we saw the last month, this comprehensive agreement on investment between the European Union and China is a positive step forward. And it is the first time after many years and many rounds of negotiations that China has committed to a greater level of market access for the European investors. It is important because now European business, it's a boost for the European businesses because they now can enter in better conditions one of the world's biggest and fastest growing markets. But we have been saying that China should respect the rules-based fair trade and norms. This is a step, but it is a preliminary one. I think that it is not only the economic dimension. The United States, Europe, the liberal democracies have a better way to cooperate between them. It is not just trade or investment. There are values, it is democracy, etc. So I believe that there will be a diplomatic priority for this unity of the liberal world towards China. And what I mean by that is that liberal democracies should reach a consensus as regards their behavior toward China. And I believe that also Joe Biden's election will be very much contribute to this. And yes, I believe that during the next year, Joe Biden, the United States, Europe, liberal democracies across the world can work particularly on issues on digital transformation and digital agreements on taxation, on data flows, which is very important, and on climate change. And yes, I'm quite optimistic that the United States will play a different role now.
And the United States to play a different role, and perhaps we all can agree that that is a global expectation. But again, to go back on China, it is interesting that you're saying it's not just about the trade, it's the values, but we have seen China crack down on Hong Kong. So can you have a relationship that works on the economics and also in the politics? Because I guess that's what the OECD tries to bridge. It looks very tricky from the outside.
That's true. We cannot pretend that we can try to have China as a member of OECD or of the liberal community. But I think that it is important that we continue to work with China. So I believe that it is very important if we manage to China to adhere to standards of OECD. That's why I refer to this particular standards. And it will be important for the liberal world. So Okay, we know that there are big problems. We know that with China, we have to have a common attitude and common behavior toward China. But on the other side, we have to work with China on particular areas with a timetable.
Right, and just very briefly, if you look at Ángel Gurría, the head of the OECD so far and the person you're trying to succeed, he's always been very vocal about the need for expansive monetary policy and fiscal policy in Europe. Is that the path that you would take on, meaning the ECB still needs to intervene in markets, that we still need to see governments spend money because of coronavirus?
I agree. I mean, the European government have spent a lot of money in order to support business, firms, and jobs. And this is the reason that the economic life is still alive and it can rebound. And I believe that in the future, what we have to do at the European level, it is first to continue support jobs and firms up to when we reach a normal a level of normality. But at the same time, the European governments have to invest on areas as digital transformation and green growth, because this is the way that this investment will be productive and will have a return in terms of GDP, which is important for the economy, because the next day will be very difficult, and we know that.
Right. And we know 2021 is going to be definitely a difficult year. So, Anna, thank you so much for your time. That was Anna Diamantopoulos, who is a great candidate to take that top job at the OECD. Thanks so much for joining us again on the phone. Matt?
All right, Maria, thanks very much. Maria Tadeo there with our Brussels edition. Let's take a quick look at what's going on in markets. 47 minutes into the session, the Stock 600, the broader European benchmark, is down right now. You can see a drop of 0.5%. Pound trading for 135. You know what? I never see really that much movement in the pound here. Has it been like 130 to 135 for as long as I can remember? Is there any difference in the pound post Brexit? Anna, do we see anything? I guess we can discuss that.
Well, we always said going into the Brexit trade deal, post-Brexit trade deal, that the gains were going to be limited by the UK's fight against coronavirus. Maybe that's what we are seeing, essentially, as we bite into the new year.
Everyone said they'd be limited
about there that we topped
at
out.
145, right? I just...
Yeah, we never made it that
In
high.
any case, no, we did not. All right, let's get Bloomberg Business Flash. For that, we go back to London and Laura Wright.
Thanks, Matt. Well, perhaps something more exciting for you. If you are looking to benefit from the crypto boom, be prepared to lose all your money. That's the message from the UK's financial watchdog. The Financial Conduct Authority says the digital coins or assets linked to them are very risky for customers. Its concerns include volatility, the complexity of the products, and the lack of consumer protection. Britain is significantly less attractive as a location for international business because of Brexit, but it is still well positioned compared with other countries. That's according to a study by Germany's Foundation for Family Businesses. It says the UK has slipped behind the US in its rankings, but remains ahead of the rest of the G7. Elon Musk is bringing his Starlink broadband system to the UK. The world's richest man aims to roll out super-fast broadband by sending thousands of satellites into low Earth orbit. He's already launched hundreds and is testing a beta service in North America. The approval allows Musk to enter into the British broadband market and compete with mainstream providers. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you very much. Laura Wright here in London. Up next on the programme, how long will bad data be good for stocks? We saw some of that on Friday, didn't we? We'll put that question to the Market Live's Laura Cooper next. This is Bloomberg. Welcome back to the European market. Open 52 minutes through Monday's session. 0.5% to the downside on the FTSE 100. Other markets also in negative territory, as you can see there on the screen. Stocks Europe 600 down around 0.5%. Joining us now, Laura Cooper, Bloomberg Markets Live macro strategist. Laura, good morning to you. We find ourselves in interesting times. The fiscal conversation, the reflation trade clearly taking a lot of the headlines. How do you put together the fact we seem to be maybe pausing on that a little bit with yields, yields going down on US Treasuries right now? The dollar is gaining and we're selling risk assets. What do you think is happening this morning?
Well, I certainly think, this is some consolidation after just given the rampant price action that we've seen to kick off 2021. It has really been quite euphoric and I think largely unsustainable, just given the fact that we are seeing these rising U.S. Treasury yields through last week and just these potential political frictions that are kind of lingering beneath the surface. But I think even now going forward, it's likely to be the case that this may not be actually a catalyst to prompt any kind of significant market sell-off that's going to extend. If anything, what we saw last week was that markets are really conditioned towards this buy the dip mentality. So as we see potentially in the coming days on signs of more stimulus coming in the pipeline, it's likely to be the case that we could see this reflation trade continue to have legs.
Speaking of buy the dip, one of the top most read stories is the worst Bitcoin plunge since March. The cryptocurrency dropped to a level that I thought it was on Friday. So it doesn't seem like a massive plunge, but I guess in percentage terms, it's interesting. We now have the UK's Financial Conduct Authority warning that consumers should be prepared to lose everything. Is everybody freaking out right now?
I certainly don't think that's the case of this kind of major market panic at this stage. Yes, we are seeing Bitcoin kind of experience this 2-day sell-off, its largest since mid-March, and that did prompt kind of a broader stock sell-off at the time. But I think really the FCA kind of response just reflects this growing popularity among both retail and institutional investors who potentially are not accustomed to the type of swings that we see in Bitcoin. I mean, the fact that we've seen, the rally is exceptional double digits so far this year, and the fact that it is quite volatile. I think they're just kind of alluding to, look, given the lack of liquidity, given the high levels of leverage used in this trade, watch for these sharp swings ahead. So, there is potential for losses, and Bitcoin potentially doesn't just go up.
Yeah, and we were talking last week with one of our colleagues, Laura, who said that maybe the number of adverts we're seeing now on the Tube network, on the subway network in London, I mean, there's nobody traveling on it really at the moment, obviously, but that you can see a lot of adverts for Bitcoin there and other cryptocurrencies, and maybe that's prompting the regulators to be paying a lot of attention anyway. Let me ask you the question of the day then. How long will bad data be good for stocks? I know that Matt's suggesting we can, there are a lot of periods where we can ask this question, and certainly periodically it comes back. It relates, of course, to our fiscal expectations, I guess, in the US, or does it go further than that? Is it also about the monetary expectations?
Well, I think it's twofold. Really, the fact of what we saw on Friday, the fact that we did have the labor market showing signs of deterioration with the headline payroll decline, and yet markets rallied on the back of that on this expectation of more stimulus. So I think the fact that economic data doesn't really matter in this current context is a theme that's extending from last year, and it's more a case of the stimulus on, stimulus off trade. So the fact that we now have the Democrats leading both U.S. houses does point to trillions in stimulus coming through infrastructure. So clearly markets are pinning expectations on that. And while we are seeing the central bank kind of hint at potentially tapering bond purchases later this year, we are seeing kind of more hawkish.
Okay, ladies and gentlemen, if you are looking to sell short Swiss franc, so according to our strategy, we're placing an order to sell short at 0.88785. 0.88785, where I'm going to place an order to sell short. So if you got a strategy of following our trades, this is the time when you can sell Swiss franc. Okay?
Otherwise, Google Bloomberg Radio.
need to remove the order. So you have to remove the order to sell short because it's, as you can see, it moves rapidly too far. Let's see, let's wait for better time. So I will remove order to sell short Swiss franc.
Nancy Pelosi says the House will move to impeach President Trump again unless Mike Pence invokes the 25th Amendment to remove him from office. There are 9 days left in his term. Big tech's Trump banned social media sites from Twitter to Facebook, shut down the president's account. Right-wing alternative Parler gets deplatformed. And the stock rally hits pause. U.S. indices hit records on Friday, but look set to slide today is the bear steepening in the U.S. yield curve, giving investors cold feet. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, there's quite a lot going on after the week that was. Again, many more arrests. We saw over the weekend also funerals of the people that unfortunately died in the riots at the Capitol last week. On to what we're expecting this week, and of course, the focus will be on possible impeachment proceedings and the focus currently on the markets. Now, we look at treasuries to see whether what we saw in terms of treasury yields giving an impact on what markets will do this week. So I'm looking at the dollar rising, most Asian stocks slipping, along with U.S. equity futures. Traders weighing in the implications of higher treasury yields amid President-elect Joe Biden's push for huge fiscal aid. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The UK says its coronavirus vaccine rollout will accelerate with the opening of 7 region hubs and sports venues and conference centres. Health Secretary Matt Hancock says the country is on course to meet its target of more than 200,000 vaccinations every day. The total now stands at about 2 million. Germany's health minister Jens Spahn is out of the running to succeed Chancellor Angela Merkel. Speaking to a German newspaper, he said his goal is to become deputy chairman of the ruling CDU. That implies he isn't competing for the top job, a potential springboard to being candidate for Chancellor at September's election. The Trump administration is removing decades of restrictions on how diplomats and other officials interact with Taiwan. Chinese state media is hitting out at the move. The editor of the Communist Party's Global Times says this is a window of opportunity to teach a heavy lesson to Taiwan. The island is de facto independent, but Beijing does consider it part of China. Air crash investigators in Indonesia have found the site where a Boeing passenger jet crashed into the Java Sea on Saturday. Data indicates it was still intact when it struck the water, reducing the likelihood of a terror attack. Teams are pulling up debris from the Boeing 737-500, a decades-old model that was carrying 62 people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, President Trump and his advisors plan a defiant final last week in office. He's expected to travel to Texas tomorrow to highlight what he believes is one of his biggest accomplishments, the wall his administration built on part of the border with Mexico. Now, the president is also planning at least one more round of pardons. This, as senior Democrats say they'll move to impeach President Trump for the second time in just over a year, unless Vice President Mike Pence and the cabinet remove him using the 25th Amendment. Well, joining us now is our senior writer, Stephanie Baker. Stephanie, I have a million questions, but maybe let's start off with impeachment of the 25th Amendment. How likely is it that something happens on those fronts?
Well, it looks like they're pushing ahead with this resolution to calling on Vice President Mike Pence to invoke the 25th Amendment. And they're demanding an answer from him within 24 hours. And if they don't get an answer, and it's unlikely that they will, he's indicated that he does not think the 25th Amendment is the right way to go. They will then proceed with the article of impeachment, and that could get a vote as early as Wednesday. It has nearly a majority of representatives supporting it. So there's no doubt that it would pass. I mean, I think the real question is what happens with the Senate, and it looks like they won't consider it until after Biden's inauguration. And I think the real problem is that Biden does not want this to interfere with his first 100 days in office. There's a lot to consider: confirming his cabinet, getting additional stimulus passed, and the question is, will they take it up later after Trump has left office as a way of rebuking him and perhaps barring him from federal office in the future?
Stephanie, we have a story saying that we're expecting President Trump to be defiant in the next 9 days. What could he actually do?
Well, besides the pardons, which, is likely he will proceed with pardoning a whole range of people, possibly members of his family. And, let's not forget that there's been this talk of him pardoning himself. He could perhaps try to issue some executive orders, perhaps taking on these tech companies that have banned him from Twitter and from Facebook, possibly doing something on Section 230, this waiver social media companies have, against anything that they publish. Whether or not that would be effective enough to really, take on these social medias in any meaningful way is unclear. I think there's just real worry about the next 9 days and what his supporters might do. It's notable that when Twitter banned him from their platform, they said that they had already seen evidence on social media that there was another, riot potentially planned for January 17th. And I think there's also just concern how the inauguration will pan out and whether or not it will be peaceful. One would expect after last Wednesday's, mob attack on the Capitol that security will be extraordinarily tight. But it's a very tense situation over the next 9 days.
Stephanie, what are you looking out for? There are so many people have now actually resigned from President Trump's entourage. Who is he actually listening to?
Yeah, I mean, it's now down to a very sort of small circle of his advisors who are left. Mark Meadows is chief of staff. He's looking at potentially an impeachment defense that does not include, the names that defended him during the last impeachment. It's been mentioned that, Rudy Giuliani would perhaps defend him. He does not have sort of, range of lawyers, set up to come to his defense. He is looking like a rather lonely, striking a bit of a lonely stance. That he doesn't have a lot of people around him. Obviously, his family, Jared Kushner, and his daughter, Ivanka Trump. But, he does look isolated.
Thank you so much. Our Stephanie Baker there, senior writer covering, of course, the White House. Now, as Facebook and Twitter banned users for supporting the violent mobs at the U.S. Capitol last week, including President Donald Trump himself, downloads surged for a less restrictive social media app called Parler. But in an effort to prevent further riot organizing, Google and Apple booted Parler from their app stores, and Amazon shut off its web services. Now, with an internet ecosystem dominated by a few big players, the Parler app has little chance of survival without access to these mainstream channels. Joining us now is Eileen Burbidge, Passion Capital partner and an expert, of course, on social media. Eileen, always great to speak to you. We talk about a day of reckoning for social social media companies. Do they get attacked for limiting, freedom of speech and free speech, or is this the way forward?
Well, I think it's all of the above, Francine. So they definitely get attacked for, taking editorial decisions when in the past they've said that they might not be able to do that or might not be willing to do that for other types of content. On the other hand, had they not moved to act, they would have continued to be criticized for allowing the president or, other people with large platforms continue to incite violence or potentially break the platform's own sort of policies. And yes, I do think also it's the way forward. So it really was a tick mark to all of the questions that you asked. I think we're going to continue to see this. I think that the large tech companies will have to act with responsibility. They will have to take decisions as and when, especially really high profile users, use their platforms in ways that are against their policies and goes in the face of what their moderation policies would be.
Eileen, will Trump go after these social media companies in his last week in office?
I'm sure that he would try. And he's also tried before, right, for different reasons. I mean, he's always been a really vocal critic, for example, of Amazon. He's sort of clashed with Jeff Bezos. He doesn't like the fact that Jeff Bezos, has such a sort of strong holding over the Washington Post as a newspaper publisher, for example, because of TikTok being owned by a parent company that's Chinese called ByteDance. He's kind of gone head to head with them. He's gone on record before and criticized, Apple and Google for various points during his presidency when he disagrees with maybe policies or decisions they've taken in terms of where to have factories, where to open up offices, tax treatment and the like. So it wouldn't surprise me at all that in the coming days, he's going to sort of increase his rhetoric. The question is how he'll do that. He'd already tried to get back on Twitter by tweeting from a couple of other accounts, which obviously immediately resulted in those tweets being deleted because that flies in the face of Twitter's policy. And so he would say that he's having his platform taken away. But of course, he sits right next to a press office. He's got a briefing room. He continues to have a really large megaphone. And yes, I'm sure that he will continue to be critical of the large tech companies. He has said that he would look at, for instance, trying to invest in or develop or create his own platform and his own social media network as just one example so far.
Eileen, is this, when we see what happened over the last 6 days, how will social media companies change? Is this a one-off or is this the new normal?
I think it is the new normal. And I think what's interesting is even before this past week with what happened on Capitol Hill, you saw the social media companies already slightly changing tack. So coronavirus and COVID-19, this pandemic, has been really illuminating because for so long, the social media companies said that they wouldn't be able to really, withhold or moderate content to the extent that maybe a lot of policymakers thought that they should. And then once you had a global pandemic, once you started to see misinformation being spread online about the virus, and of course about vaccines as well, you do see them taking action and you do see them saying, listen, if information is going to be harmful to the public, we do have a responsibility to take that down. And they started doing that in 2020. And so actually what's happened now with Capitol Hill and the president is a bit of a culmination of that. And I don't think it's going to go away. I do think they will face, louder and louder cries to behave really responsibly and to actually really moderate what happens on the site. I think that is short, by the way, of censorship. I think that's short of behaving like a publisher where they choose or make editorial decisions about only, what's on the sort of services and not. They already do exercise some editorial responsibility by having news feeds, highlights, and for instance, promoting certain content. But in terms of being able to control what everybody says or any user says, I think we're going to be somewhere in the median, in the middle of those two extremes.
Eileen, what is the chance that actually, President Trump or those around him, figure out a way of having a social media platform that is far-reaching, that will push their views?
I think that that's hard to predict, but I would find it really unlikely. I think that what's really propelled all these social media platforms is, initially unfettered access for a large diversity of views. And I think that that's still what they would say that they offer. It's just that they need to really balance that with not letting harmful, extreme content or ones that incite violence or potentially harm to other people on their platforms. If somebody like President Trump then, for example, was to start a social media site or a platform for discourse, I think it would be pretty clear what kinds of topics or what kind of sort of angles he would take. If that platform was going to be welcoming to dissenting views, I'm sure it could have the possibility of being successful if he could sort of bring together a tech team that was capable of building something that could scale like that. But I think the intention is slightly different than what the larger social media platforms have already achieved. And so it strikes me that it's probably already hampered coming out of the gates.
Great. Thank you so much, Eileen Burbidge. They're a Passion Capital partner, of course, with some great insight into how these social media companies operate and will operate in the future. Now, coming up, we continue our coverage of Trump's final 9 days in office. Next up, we'll be speaking to Lou Lukens. He's Signum Global Advisors' senior partner. That's in about an hour from now, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we're just getting some news out of Twitter, and in pre-market, the share price of Twitter is down some 6.1%. This is pre-market for Twitter following the permanent ban on President Trump. So interesting to see the impact this has on Twitter. We'll see how this evolves throughout the day. A reminder, of course, President Trump now banned permanently from Twitter and temporarily from Facebook. Now, European markets are trading slightly to the downside. That's as traders weigh the implications of higher U.S. Treasury yields and President-elect Joe Biden's push for huge fiscal aid to fight the pandemic. Well, joining us now is John Hardy, Saxo Bank Head of FX Strategy. John, as always, thank you so much for coming in. There's now a bit of concern about what treasuries are doing and how they play with, of course, all of this fiscal stimulus that Joe Biden could be putting in place. What's trajectory for dollar given that?
Well, yeah, I think it's clear that this pickup in U.S. yields has been directly linked to a consolidation in the bear run lower, a very persistent bear run lower, to be fair, in the U.S. dollar. And now with a little bit of risk off to start the week, that also adds some support for the dollar. But I think as long as the yield gains are sort of tempered and don't extend much here, this is merely a chance for dollar bears to get involved again. And we still have some space, maybe 1% up to 2% for the dollar to consolidate without really affecting the trend here. So I'm still looking for the dollar to weaken, barring some crazy accident across asset markets, as the dollar will still trade as a safe haven in those types of volatility events.
John, what happens if we have a lot more fiscal stimulus? I mean, how does it impact treasuries?
Well, yeah, if the link to the U.S. yields running higher is anticipation of fiscal stimulus, it doesn't have to be dollar supportive at all. In fact, quite the opposite, that those higher yields are accompanied with much higher U.S. inflation because we're seeing increasingly negative real rates in the U.S. And also because, as we saw with the November trade data and the trade data trends, the more the U.S. stimulates, the more it feeds external deficits. Who's going to want to offset that Treasury issuance from abroad? Basically, very few people will, and that is the story that drives the dollar lower.
John, what happens to emerging market currencies? Is this the next frontier, something that we need to spend a bit more time on?
Well, if we're heading for a proper global reflation, emerging market currencies should be very well positioned for that. Part of the exercise has to be in the developed world to get to wind down this debt mountain, and you wind down that debt mountain with inflation, with negative real interest rates. The leverage there is far, far greater, multiples of what it is in many emerging markets. So if we're seeing a global recovery, a weaker dollar will certainly help as well. Emerging markets across the board should be the star performers of the next cycle. But it's just that a lot of this is rather priced in, and we're rather aggressively hoping, of course, that we get this vaccine rolled out quickly, and we're getting to the other side of that starting within a quarter or so. So we all have to hope, of course, that this turns out very well. The market is rather pre-positioned for this, but there's certainly more potential to come from a durable reflation trade in the next cycle.
John, what's your take on renminbi? If you look at some of the consumer prices in China, are they on a much better footing in terms of the economy? And so, are we going to see a more stable renminbi?
Well, we've seen a very stable renminbi. It's quite stable and quite strong at the strongest end of its of the basket that China has established for its currency. I expect it to stay at that strong end of the basket. You have China enjoying all of this fiscal stimulus from markets, especially from the U.S. You stimulate in the U.S. and that stimulus feeds straight through to China. They have the luxury of running a slightly tighter policy because of the stimulus they're getting from externally. It allows them to do some deleveraging. I don't think they want excessive strength, though, however, if you're looking at what the implications are for their exports. So just a strong and stable currency as we look at how the U.S.-China relationship shapes up under a Biden administration. That, to me, is really the big key, sort of longer term, this ongoing risk of a decoupling and what that will mean for China trying to launch its own credible alternative to the dollar as a currency for trade and otherwise to avoid the weaponization long term of the U.S. dollar and the U.S. financial system. So lots of big questions from here for all that in the mix.
Great. Thanks so much. John Hardy there, Saxo Bank Head of FX Strategy, joining us this morning. Now, coming up a little bit later on the program, we also hear from the Cleveland Fed President, Loretta Mester. She talks, of course, about Treasury. She also talks about equality amongst employees. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's check on the markets because it's the second working week of January and we have quite a lot of news, of course, going on. A lot of the focus will be on what the Democrats will do. House Speaker Nancy Pelosi saying that they will try and impeach Donald Trump. Unclear whether that will go ahead or not. Dollars rising. The dollar very much in focus after a buying frenzy swept across global markets last week. Investors are now starting Monday in more of a cautious mood. The dollar climbing against all of its major peers with demand supported by elevated treasury yields. European stocks pulling back from a 10-month high. S&P futures dipping. Bitcoin prices cratered, sliding as much as 21% over Sunday and Monday to as low as $32,389. Now coming up, as U.S. equities hit another record high, how should investors be positioned to make the most of the rally longer term? We discuss that and plenty more with Lars Klarbier of Edmond de Rothschild.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Good morning, Francine. Senior Democrats say they will move to impeach President Trump for the second time in just over a year, unless Vice President Mike Pence and the cabinet remove him using the 25th Amendment. House Speaker Nancy Pelosi says lawmakers will act with urgency after the storming of the U.S. Capitol by a pro-Trump mob. Some of Wall Street's biggest banks are pausing political contributions in the aftermath of the riots on Capitol Hill. Goldman Sachs will probably limit donations to the politicians who tried to overrun the 2020 election result. JP Morgan is planning a 6-month suspension to both Republicans and Democrats. Citigroup is temporarily halting all political contributions for the current quarter. Britain is significantly less attractive as a location for international business because of Brexit, but is still well positioned compared with other countries. That's according to a study by Germany's Foundation for Family Businesses. It says the UK has slipped behind the US in its rankings, but it remains ahead of the rest of the G7. And Apple and Google are removing social media platform Parler from their app stores, and Amazon will no longer host it on the cloud. Access to the website appeared cut off after midnight in California. The app came to prominence in last week's storming of the Capitol in Washington. It's popular with far-right groups seeking an alternative to mainstream services. Parler says it doesn't condone violence. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, 2020 took investors on a wild ride, with 2021 shaping up to do the same as U.S. equities continue to hit record highs and Treasury yields climb on expectations of a global recovery. Now, as the world returns to a new normal, where should investors be putting their money? Well, joining us now is Lars Kalbreyer. He is Edmond de Rothschild, Global Chief Investment Officer for Private Banking. Lars, thank you for joining us. We've had really an incredible and awful, difficult week in U.S. politics. How does that play out into markets?
Well, I think the most important is to look what is coming ahead. And what we will be having is next week, there's going to be a new president. The new president has a very clear agenda. We know what the agenda is. He has a very clear policy, which he has vehiculated a long time ago. And much more importantly, he also has a double majority, so a very slight majority in the Senate, but also a majority in the Congress. So all that bodes for a very powerful new U.S. government.
So, Lars, what does that mean for your investment strategy going forward? I know you have a great note out with some of the various themes that you're looking at, but what's your top play for 2021?
In fact, the 4 key themes. The first one is China. The second one is what to do with government debt, with yields being at ultra-low levels. The third one is the move, which has been accelerated by COVID, into the digital world. And the fourth one is ESG. So if I perhaps start with China first, China cannot be ignored anymore. In fact, international investors, in our view, need to be allocated to that region. It's not an emerging market anymore. It still is considered as an emerging market, but in our view, China has emerged. If you ask the bosses of Google or of Apple who the biggest competitors are in the technology sector, they will be saying it's Chinese companies, unfortunately not European companies. Therefore, China needs to be in overall allocations. That's on the equity side.
Yeah, Lars, if you look at China, how much of a new change in trade between the U.S. and China are you expecting? Are we so sure that actually Joe Biden will not, lead a similar policy towards China than President Trump, just in a different way?
I would agree with that. I think Joe Biden is going to continue to have a fairly tough policy towards China, very similar to what Trump has, but there's a huge difference. In fact, 2 key differences. The first one, his policy is going to be far less erratic than the one which we had from the previous government. So we will not see of tariffs being installed overnight. So it's going to be a policy which is going to be much more consistent first. The second point, which is very different, remember that the Trump government, very much took a lot of unilateral actions. We believe that the Biden government is going to be much more in tune with its traditional allies, that means Europe or Japan, in order to formulate a common policy towards China.
Lars, what do you do with debt? So you look at China, and then you're also looking at corporate and emerging debt. Should we worry about it less than some people?
No, I think where we should worry, and where many investors are worried about, is very much European sovereign debt, for instance. In the past 30 years, you were able to get a positive yield with European sovereign debt, investing in European government bonds. First, you went to France or Germany, then you had to go to the periphery, like Spain, Italy, or even Greece. Nowadays, with all the programs which have been put into place, with all the monetary stimulus, you just do not get any positive yield on that debt anymore. And therefore, investors will have to see and find some new sources of yield in order to be able to compensate it. And these new sources of yields are more difficult to find. Emerging market debt, for instance, is one source of yield where you will be able to get, for the same credit quality, some positive yield. But I'm also thinking about corporate debt or hybrid debt, for instance, where you are getting compensated by taking a bit more risk.
When you talk about digital technologies and their corollary cybersecurity, do you also look at Bitcoin?
Well, we're not really thinking about Bitcoin as such. In fact, what we are looking at is the adoption of new technology, which was really boosted by COVID. In fact, whilst we are all fixated for the right reasons on COVID, what we need to also see is that COVID has increased dramatically the adoption of digital technologies, also to a population group which has never used digital technologies in the past. If you look at, for instance, the population group of 60 years and older, you see that 70% in France, 70% of the transactions of e-commerce have been done for the first time since COVID. And that is unlikely to recede post-COVID. So that is very much what we're looking at. The adoption of telemedicine, for instance, has been incredibly boosted by COVID. Having said that, there is another, the flip side of the coin, that is cybersecurity. You have more and more people using digital technologies because of COVID, people who have never used it in the past, people who are perhaps less in tune with cybersecurity, and therefore there will also be very strong investments within cybersecurity in order to keep the system safe.
Lars, ESG was the biggest winner of 2020. Will it win even more in 2021?
Well, I think ESG is just at the beginning of a multi-year trend. And the reason for that is manifold. I mean, first of all, the biggest economy in the world, the US, has now totally changed tune. In fact, the Biden government has been putting ESG as the forefront of its program. Usually what happens is when the US decides to go into one direction and to strategically go into one direction, they tend to catch up very, very quickly. So I wouldn't be surprised if in a few years' time, the US can be a leader in ESG technologies. But also, and very critically, if you look at all the programs which have been put into place in order to boost the economies, be it in China, be it in the US, be it in Japan or in Europe, they all have one common denominator, and that is ESG.
Thank you so much, Lars Kalbreyer there, Edmund de Rothschild, Global Chief Investment Officer for Private Banking. Now coming up, race against time, the UK ramps up its vaccine rollout as cases surge and hospitals struggle to cope. More of that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Looking to profit from the crypto boom. Be prepared to lose all your money. That's a message from the UK's financial watchdog. The Financial Conduct Authority says that digital coins or assets linked to them are very high risk for consumers. Its concerns include volatility, the complexity of the products, and the lack of consumer protection. Now, a group of HSBC shareholders are asking the bank to cut its support to the fossil fuel industry. Share Action, a UK non-profit, is coordinating the plan, which it says is backed by Amundi and Man Group. They are asking HSBC to publish a strategy to reduce its exposure to fossil fuel assets and set targets in line with the Paris Agreement. And Elon Musk is bringing his Starlink broadband system here to the UK. The world's richest man aims to roll out super fast broadband by sending thousands of satellites into Earth orbit. He's already launched hundreds and is testing a beta service in North America. The approval allows Musk to enter into the British broadband market and compete with mainstream providers. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the UK is ramping up its vaccine rollout with the opening of 7 regional centres this week. That comes as the nation's hospitals struggle to cope with surging cases. It's a race against time to administer vaccines, which the UK says it is making good progress on.
The good news is that we're getting to over 200,000 people a day is significant progress. And amongst those who we need to reach most, amongst the over 80s, we've now vaccinated around a third of all of the over 80s. So very, very good progress.
Meanwhile, across the Channel, European countries are administering the first shots of Moderna's vaccine today after regulatory approval last week. Now, for more on all of this, Maria Tadeo, our reporter in Brussels, joins us. Maria, what explains the lag in vaccination when you compare Europe to the UK?
Yes, Francine, and it is a good question. If you look at the numbers coming out of the UK, where you have 200,000 people vaccinated on a daily basis, you're hitting the 2 million. The Europeans are nowhere near the 2 million mark, and they're very far from it to some extent. And now that we've had 14 days to look at what's gone wrong in the strategy, it's clear, Francine, that there are still issues when it comes to the distribution, when it comes to the logistics, but also in particular with the regulation. And that's why the European regulator, the Commission, is coming under big pressure to treat this as an emergency. The UK has 3 vaccines. We only have 2. Again, there's also a question as to why is the European Commission buying vaccines such as the Sanofi one when they haven't been approved. Now, they get it. They know that, and they're trying to remedy that. They doubled the amount of Pfizer doses to 300 last week. Now we have 160 Moderna ones that should come into place starting this week. But again, that big lag is creating big problems for the Europeans. They are aware that they're behind and that they need to speed it up. They're hoping, however, that the procurement is now going to get better and that we are going to get more vaccines, and that should alleviate some of the distribution issues, in particular when it comes to that distribution from the Commission to the countries.
So, Maria, why is the UK going so fast?
Well, there's 2 issues, again, that come into play. Maybe perhaps as a regulation, too. The UK straightened the regulation of vaccines and the approval of vaccines as an emergency matter. They have 3 vaccines, usually 2 weeks before the Europeans get to that. Also, they have been good until now in terms of setting up the logistics, the mass distribution centers, places when people can go and get the vaccine by the thousands on a daily basis. In Europe, that mass vaccination concept, the idea of big places where a lot of people get together to get the vaccine, that hasn't really happened across the EU 27. It happens in Germany, but really that's the only place at this point. And also the fact that they bet very much on the AstraZeneca vaccine, gave it the approval, and they were able to distribute that very quickly. The Europeans, they have a big portfolio of 6 vaccines, but only 2 have been approved, and that's becoming a problem now.
Maria, thank you so much. Maria Tadeo there, our reporter in Brussels. Now, coming up, market mania. Bubble warnings are starting to blare as retail investors flock to Bitcoin and bullish options. We discuss that next. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francie Lacqua here in London. Now, many Fed presidents have been vocal on equality and diversity, both in the wider world and in their own profession. The Cleveland Fed President, Loretta Mester, says the field of economics needs to be more diverse so it represents the public.
Economics is such an important field. I mean, it touches everyone's lives. You know, policymakers make policies that touch everyone's lives. You know, business people, you know, make hiring decisions that touches everyone's lives. So because it's such a broad field and it really is important for everyone, I think it's really important that we have a very diverse group of people going into economics. And, you know, I don't know how you feel, but my own feeling is that we could do better along those dimensions.
So much of it is also role modeling. And, you know, it's great that young women now can look to yourself, can look to the likes of Janet Yellen and think, right, you know, there are roles at the very top for women in economics globally. Was that the case when you were going through and rising through the ranks? Did you have female role models that made you think, well, more is possible?
No, but I didn't feel a lack of it because I had a lot of men who helped me. You know what I mean? That's the other thing I think it's important to realize. We don't want to wait until it's diversified to say, okay, now we have role models. It's really important to get to that diversity phase. We're going to have to rely on men. We're going to have to rely on them to help women. And that's happening now. And that's the great thing. It's like, you can just see it happening in the field, the AEA meetings, like the session that I was in, right? Some of the researchers doing this work are not all women. This is now broadening out. So there's a lot of males that are interested in diversifying the field too. And another reason that, you know, we really care is that if you want the field of economics to be growing and to be taking on new challenges and innovating and using new methods and interested in new questions, you need to have diversity in it, or else it's going to become a stagnant field and it could die out. I know that sounds silly, but you've seen that in other kinds of disciplines. And so it's really important that we not think of this as just women helping women. It's got to be everyone helping to diversify the field. And similarly with minorities, you know, we don't have very many African-American Black economists. They just, you know, they're just not going into the field, and we need to do better there as well. I think at the Fed, we have have about 700 PhD economists, and we hire a lot more bachelor's and master's degrees. So we have a vested interest in making sure that the field's diverse because we represent the public. We work for the public, and it's really important that we have all views represented when we're evaluating what's appropriate policy. Okay. Just a diverse decision-making is much better decision-making.
Well, that was the Cleveland Fed President, Loretta Mester. Now, everyone from retail newbies to institutional managers is rushing to cash in on a 10-month-old melt-up. Once the market's most risky bets, things like Bitcoin and call options, have taken off, prompting bubble warnings from every corner. Well, joining us to discuss all of this is Bloomberg's Danny Berger. Danny, good morning. So what sort of warnings are we starting to hear from market observers?
Francine, a lot of the concern really does revolve around aspects of the market that are more retail driven. This really is not a new story. It's something we heard around second quarter of last year as well. But it's things like when we see Bitcoin hitting new records, you get this concern that there's going to be a big fallout days like today, for example, when we've seen Bitcoin fall quite significantly. But it's not just Bitcoin that we're seeing. The warning signs revolve around. For example, a lot of people have pointed to the options market saying that call call options are really a much used tool by retail investors that is perhaps concerning. Last week alone, we saw the fourth and fifth biggest day in terms of volume when it comes to bullish call options. And these do tend to be the shorter dated individual small block call options that are really hallmarks of the sort of Robinhood trader crowd. But just because you have these corners that they're warnings doesn't mean that the entire market is doomed. For example, Bank of America has a checklist that they say helps them determine whether or not the market is a bear market. And 67% of that checklist said, yes, it is indeed a bear market. So not everything is full of exuberance. I think the concern is really just things like tech or Tesla, for example, when you get sort of the day traders that are really enjoying or really buy up these sorts of securities.
Danny, who's behind this speculative rally?
Certainly retail is part of it. As we've been discussing, Sundial Capital showed that more than half of the call options that are being traded now are in small lot sizes. But it's not just retail anymore. When you get a market where there's so much momentum behind these various assets, you get the institutional players starting to participate because in a way they have to, or rather they at least can't bet against it at the moment because they lose a lot of money. Goldman Sachs has a basket of the most shorted stocks in the U.S. market, and that rallied 10% yesterday. So if you were shorting one of these names that you think won't do well, that maybe has a lot of retail interest behind it, you are going to feel the pain. So in this way, even if you're not participating with it, you at least can't necessarily bet against it unless you're willing to take a big drawdown at the moment for what you hope would be a bigger payoff in the future, Francine.
Thank you so much, our Danny Berger there with some of the latest market moves. Now let's get you up to date with what else we need to watch out for this week. Of course, it's central bank heavy. Today and tomorrow, we hear from Bank of England policymakers on negative interest rates and coronavirus. Then the annual JP Morgan Healthcare Conference kicks off today with dozens of biotech and pharma companies giving updates. We also hear from a slew of Fed presidents, including Boston's Eric Rosengren and Dallas's Robert Kaplan. On Wednesday, the ECB President Christine Lagarde speaks at an online conference on the EU economy post-COVID and post-Brexit. The central bank also publishes the account of its December monetary policy meeting on Thursday. And then on Friday, Wall Street lenders kick off earnings season. We get results from JP Morgan, Citigroup, and Wells Fargo. Now, this is what the markets are looking at today. It's very clear that after a buying frenzy swept across global markets last week, investors starting Monday in a little bit more of a cautious mood. Dollar climbing against all of its major peers, European stocks actually pulling back from a 10-month high. If you look at S&P futures, also dipping, and Bitcoin prices cratered, sliding as much as 21% over Sunday and Monday to as low as $32,389. Now, Bloomberg surveillance continues in the next hour. Ton Keane joins me out of New York. We'll be talking to Lou Lukens of Signum Global Advisors. We'll talk Trump and possible impeachment vote. This is Bloomberg. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television. Nancy Pelosi says the House will move to impeach President Trump again unless Mike Pence invokes the 25th Amendment to remove him from office. There's 9 days left in his term. Big tech's Trump banned social media sites from Twitter to Facebook, shut down the president's account. Right-wing alternative Parler gets deplatformed. And the stock rally hits pause. U.S. indices hit records on Friday, but looks set to slide today. It's the bear steepening in the U.S. yield curve, giving investors cold feet. Well, good morning, everyone, and it's Monday, second working week of January. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're expecting, of course, maybe a lot to happen in U.S. politics. We also look at treasuries and that big move in treasuries, now talking to, a lot of investors figuring out whether it means that we could see some kind of correction elsewhere. So we look at the markets and politics.
No, I like the way you say pause in the markets. That exactly describes it, Francine. There is no pause in Washington. Clarity Sunday by Speaker Pelosi, moving to impeachment Tuesday. She's given a 24-hour reprieve of some sort to Vice President Pence. I think the news flow on this Monday, Francine, will be really, truly remarkable.
Yeah, it certainly will. And of course, away from politics and the markets, we have a lot of central banks later on this week as well. Now let's get straight to the Bloomberg. First word news, here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, an ultimatum from House Speaker Nancy Pelosi. She says lawmakers will vote whether to impeach President Trump for the second time in less than 2 years, unless Vice President Pence and the cabinet invoke the 25th Amendment to remove him from office. Following the riots at the Capitol, Pelosi says the president represents an imminent threat. A preliminary vote could take place Tuesday. Bloomberg's learned that Pence has dismissed the idea of using the 25th Amendment. President Trump and his advisors plan a defiant final last week in office. He's expected to travel to Texas tomorrow to highlight what he believes is one of his biggest accomplishments, the wall his administration built on part of the border with Mexico. The president is also planning at least one more round of pardons. Some of the biggest names on Wall Street are pausing all political donations in the wake of the riots at the Capitol. Goldman Sachs, Morgan Stanley, Citigroup, and JP Morgan Chase have joined a growing list of companies changing or reviewing their donation policies. Goldman probably will curtail future giving to elected leaders who fought to overturn the 2020 election result. Shares of Twitter fell sharply. Today, they were down more than 8% before paring some of the loss. On Friday, Twitter permanently banned President Trump's personal account for repeated rules violations. The president had more than 88 million followers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, some real ambiguity out there today. We'll see which way we go off that difficult jobs report of Friday. We reset futures negative 25, down futures worse are now negative 209. Bitcoin, I know Francine's all over Bitcoin, down, I'm going to call it 10%, 36,000 on Bitcoin. An important Joanna Ossinger article from Bloomberg on Bitcoin today. Really must read. Brent crude 55.13 a barrel. I don't know where to go, Francine. It's just sort of a mush of a data check today.
Yeah, Tom, I think weighing on the minds of investors are probably worries that equities are running too hot and valuations are stretched at a time when major parts of the world are still grappling with the worst of the pandemic. This is some of the thinking behind it and some of the questions that we were asking, Tom, certainly last week. You're right. Bitcoin, look, prices cratered. I know they're down some 10% at the moment, but if you look at the move over the last 2 days, they fell as much as 21% to as low as 32,389. And overall, I just think it's a cautious mood, Tom, after the buying frenzy that swept global markets last week. So we'll have plenty more, of course, on the markets and how they intersect with policy and politics. Senior Democrats now say they'll move to impeach President Trump for the second time in just over a year, unless Vice President Mike Pence and the cabinet remove him using the 25th Amendment. Well, joining us now is Bloomberg congressional reporter Jack Fitzpatrick. Jack, actually, I think it's the second time in 2 years that the president has been impeached. But if you look beyond that, what are the possibilities of something happening? So either a 25th Amendment or an impeachment vote this week?
As of now, not very likely. We're looking to see if there's going to be some sort of change in momentum in terms of critical Republicans getting on board. There have been some Republicans like Lisa Murkowski in the Senate, who is effectively almost an independent since she initially won as a write-in candidate, saying she wants Trump to be removed from office. But there hasn't been a large group of House or Senate Republicans talking in favor of impeachment or the use of the 25th Amendment, and Pence hasn't been responsive to that. So this move by Pelosi to ask for unanimous consent, first for a resolution recommending the use of the 25th Amendment and then moving on to impeachment, seems more a political illustration of where Republicans stand than anything that's likely to remove the president from office, unless a bunch of people change their minds.
Jack, when you look at, how difficult would it be for Joe Biden to deal with these legal consequences of his predecessor in the first 100 days?
Well, this is turning into something that seems like it's going to take a long time for lawmakers to investigate, for the FBI to investigate. The legal and political repercussions are not going to be quick and easy. The questions about whether Republicans really want to work with Biden, that's one piece of bad news for him. The other questions about how this happened and why security at the Capitol, there are a lot of things that lawmakers are going to need to work on that are tied basically to the basic operations of democracy in Washington. So it's a very, very bad way to start out a new administration.
Jack, Tom Keene in New York, good morning, and thank you for your work in Washington and all of our team on what I'm sure will be an exhausting week. Jack, I got 47 questions and no time for it. So much of politics at any given moment, Jack Fitzpatrick, is the idea of avoiding a vote. Can the senators of all political persuasions avoid a vote on this insurrection?
It's unlikely they can avoid a vote. What we expect to happen, and we're still getting a whip count here, is this unanimous consent measure will probably be objected to by somebody. At least that's what Pelosi is testing. And then Tuesday, if there is the objection, they go to a vote on impeachment. We've seen a huge number of House Democrats talk in favor of impeachment. It looks like they'll probably have the majority again. The Senate then has to take it up. So they have to debate it. I'm not sure there's a realistic way for them to sidestep this as long as a House majority puts it to them.
And folks, this is the great unspoken that you're seeing on a Monday morning in this eventful week, is people really scrambling to try to avoid votes. And as Mr. Fitzpatrick says, it appears they will have to vote on certain matters. Jack, I want you to explain to the Bloomberg audience, and particularly the international audience, whether it's Angus King of Maine, maybe Susan Collins, maybe others that you know better than me, but you mentioned Murkowski of Alaska. If she does not move across the aisle, if she moves to be quote unquote independent, what does that really mean?
On an individual basis, it could be very interesting to see if there are Republicans who side with Democrats on this. Obviously, Mitt Romney sided with them on impeachment the first time. Considering, though, the fact that it takes 2/3 in the Senate to impeach, that really is a matter of individual politics. Unless we see a huge change in where the mainstream Republicans stand, it doesn't look like there is enough support now to impeach the president. So there's probably going to be an attempt to pick off those moderates, maybe Susan Collins, Murkowski, Romney, maybe others. I'm not sure who the other examples would be, but it's very difficult to get up to 67 votes, or if there's one vacancy, 66. So if you can get moderates to side with Democrats, maybe that's a good sign on legislation moving forward for the Biden administration. Maybe it speaks to their frustration with Trump. But again, it's a really, really uphill battle in terms of impeachment in getting to that high number of a 2/3 majority.
Jack, we know the president will remain defiant in the last 9 days in office. We know he's traveling to Texas. What else, what are you expecting from him?
It is safe to say he is likely to remain defiant. There's been all sorts of talk about his wish list for potential pardons. That's probably the top priority. It's a strange time because we're not even getting a lot of guidance on what his daily schedule. For a little bit, his daily schedule is that he will have many calls and many meetings, and that's all the White House is saying in the mornings. The pardon list is something to watch for. And from Congress's perspective, any unknowns are what is scaring Democrats. There is concern, vague concerns about hoping he does not take any military actions, anything out of left field. But again, the pardon issue and his long list of pardons that he's been considering, including possibly a self-pardon, is probably the most high-profile and controversial thing on the list.
Jack, thank you so much. Our Bloomberg congressional reporter, Jack Fitzpatrick there. Now, up next, we speak with Louis Lukens. He is Signum Global Advisors senior partner. He'll, of course, look at the legal implications for possible impeachment. Lou Lukens, up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London, Tom Keene in New York. We're looking at the markets. Futures negative 21, but there's really only one story worldwide, and that is the story of Washington through the second week of January. We've been speaking with a lot of given voices. One of the great themes they say is, well, if this happened in Senegal, we'd have all the answers. Let's talk to someone with immense experience on banana republics, Louis Lukens, and with no disrespect for the nation of Senegal, Ambassador, but you were the ambassador to Senegal. And right now, as President Bush says, we are on the edge of banana republic. What would we do if this occurred in your Senegal?
Well, if this occurred in Senegal, and by the way, they had elections there when I was there in 2012, and this did not happen, and the president, who had been in power for too long, admitted defeat and graciously stepped aside. But if this were to happen, what's happening in Washington now, in Senegal, or any other country in the world, we would work together with allies to try to impel the president to acknowledge the results and to accept the will of the people. And it puts our diplomats in a difficult position when they try to do this now around the world, and there are a couple of elections globally this week, when we have a situation at home where our president is not accepting the results.
You have had some challenges with the Trump administration, but let me give you the what if. What would be your counsel to the Secretary of State this morning?
Well, this is a really interesting question. A lot of senior Foreign Service officers have written a letter through what we call our dissent channel at the State Department to the Secretary of State, encouraging him to distance himself from the president and to condemn the violence at the Capitol last week. And their point is that if this happened in any other country, we would be condemning this in the strongest possible language. We should not absolve ourselves, and we should be condemning what's happening in our own country. Mike Pompeo, of course, has not responded to that and has not done that. He is one of Trump's most loyal lieutenants. So I don't expect that he will suddenly, criticize President Trump. But it puts our diplomats in a very difficult position around the world, trying to figure out how do we talk about what's happening in Washington without being disloyal or seeming to be disloyal.
Lou, does it help if President Trump were to be impeached or removed by the 25th Amendment? Does it help with how the U.S. is perceived worldwide, or does it make no difference?
No, it helps, because then it shows that there is a process in the United States, and that we have law and order, and that we have a system that functions properly to remove leaders who have overstepped the boundaries. I don't think that's going to happen. I don't think Vice President Pence is going to invoke the 25th Amendment, and I don't think the president will be impeached before the end of his term next week. But certainly, were those things to happen, either one of them, it would put our diplomats in a better position overseas.
If the president doesn't get impeached, what happens in the first 100 days of Joe Biden? Will the legal troubles of Donald Trump actually overshadow some of the policies that Biden could be putting in place?
Well, this is the challenge the Biden administration will face. I mean, I think that it is likely that the president will be impeached in the House before inauguration, but will not be taken up in the Senate. So then it goes to Chuck Schumer as the Senate Majority Leader starting next week to try to figure out, does he schedule a vote or hearings on a Trump impeachment after he's left office, or does he focus on trying to pass Joe Biden's priorities, which are legislative packages to address the coronavirus, the pandemic, and also to try to boost infrastructure spending in the country. And I think if you're Chuck Schumer and you're Joe Biden, you want to focus on the latter and not be distracted and not have the first 2 months of your administration consumed with Donald Trump.
Well, it may not be consumed with Donald Trump, but Donald Trump has consumed everybody, including his supporters, for the last 5 years. How do we de-Trump, Ambassador, Republicans and Democrats?
Well, I'm not sure we do, Tom. I mean, I think Trump is likely to announce his 2024 campaign next week. And I think he will do that as a way of staying in the news and, more importantly for him, continuing to be able to raise money off of his supporters, and money that can go to pay salaries and travel expenses and the rest of all that. So I think he will very much still be in the news. And I don't think that Republicans are going to be able to disassociate themselves from him.
What should be the first State Department initiative of the Biden administration? There's clearly a thematic, let's go out and reach out to our allies theme. great to talk about, but there's the doing of it. Is it shuttle diplomacy?
Well, I certainly think Joe Biden will not be as sort of consumed with diplomatic initiatives initially. He's very focused on the domestic agenda, but I think his Secretary of State, Tony Blinken, I think we will quickly see him on a world tour, a world apology tour, if you will. I think he'll go to Europe first, is my guess, and I think he will start talking to allies. And I think the things they want to focus on are bolstering democracies, including obviously now our own. We can't just be pointing a finger at other countries because we have our own issues now that are clearly out there for the world to see, but also with a real focus on climate change and addressing climate change. And everything that the U.S. State Department does and our foreign policy does, and our incoming National Security Advisor, Jake Sullivan, said this a couple weeks ago, has to be focused on how does this help average Americans? How does this foreign policy help rebuild our country and rebuild a middle class? So it'll be a very interesting and different approach to foreign policy under this administration.
Lou, how should we look at social media companies? How are they now publishing companies?
Well, your last correspondent talked about Trump's priorities during his last week, and I think he's made clear that he will try to do what he can to curtail the activity or the reach of social media companies now that they've banned him. There's very little he can actually do in a week, so I don't think we'll see much actual concrete progress there on Trump's part. But I think social media companies certainly will be looked at very closely by the incoming Congress and Senate. They've been looking in the House. Democrats had a large report late last fall on the impact of social media companies and what can best be done about them. And I think we'll see enhanced enforcement activities and enhanced funding of the antitrust division at the Department of Justice, and taking a really hard look at the social media companies and whether they have too much power.
Ambassador, thank you so much. Louis Lukens with Signum Global Advisors. Greatly appreciate the perspective here on an eventful week. I'm really looking forward to this conversation. Georgia's a purple state now. She is living the Purple District, Oakland County, up in Michigan. Haley Stevens is a Democrat from Michigan with really interesting challenges in one of those 55, 45, 52, 48 districts. We'll get her perspective, the Democrat from Michigan, in the 6 o'clock hour. This is Bloomberg Futures, up 21. Excuse me, down 21.
have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. The social media site Parker appears to have gone offline, and its CEO warns that the outage is likely to be longer than expected. Amazon, Google, and Apple have withdrawn their support in the wake of the riots at the Capitol. Parler says others with enough servers won't do business with the company. Facebook and Twitter have banned President Trump as well as others supporting the violence that led to a surge in downloads for Parler. Bitcoin's roller coaster ride has taken another twist. A two-day drop in the digital currency is stoking concern that the cryptocurrency boom may run out of steam. Bitcoin fell as much as 21% yesterday and today. That's after hitting a record high of more than $42,000 last week. And a group of HSBC shareholders wants the bank to get a little greener. They've filed a resolution urging it to cut its support to the fossil fuel industry. Amongst those backing the move are Amundi, Europe's largest listed asset manager, and Man Group, that's the world's biggest publicly traded hedge fund firm. HSBC says it's strongly committed to addressing climate change and eventually align its financed emissions to net zero. And that is your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. A bit of pressure on European data, but actually global markets worldwide. I did want to show you Twitter, what it was doing pre-market, down some 6% after President Trump was banned over the weekend. Now, after a buying frenzy that swept across global markets last week, investors starting Monday in a cautious mood. And Tom, what weighs on people's minds at the moment is worries that equities are running too hot and valuations are stretched.
Yeah, I'll go with that. I think there's some real ambiguity here over which way this is going to cut. With higher interest rates, does it mean a better economy? A number of reports over the weekend, folks, of a booming labor market to come. Nobody believes that, but we will see. Within that mix, of VIX moves 2 points back, 21 levels where we closed on a buoyant Friday, back to 23.61 as well. To readjust and recalibrate the American economy within all the news, Kevin Cirilli in the next hour, 7 o'clock, rather. In the next hour, Jennifer Lee, BMO Capital Markets.
我开始做直播是在今年年初的时候，那主要是去年的话，可能参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, let's take a closer look at what we're watching for this week. Of course, away from U.S. politics, that will probably dominate everything we're seeing. It's central bank heavy. Today and tomorrow, we hear from the Bank of England policymakers on negative interest rates and coronavirus. We also hear from a slew of Fed presidents, including Boston's Eric Rosengren and Dallas's Robert Kaplan. On Wednesday, ECB President Christine Lagarde also speaks at an online conference on the EU economy post-COVID and post-Brexit. And then on Friday, Wall Street lenders kick off earnings season. We get results from JP Morgan, Citigroup, and Wells Fargo. Well, to talk about all of the markets and what we can expect later in the week is Altaf Kassam, State Street Global Advisors EMEA Head of Investment Strategy and Research. Thank you so much, Altaf, for joining us. If we kick it off with some of the main concerns in the markets today that could last quite a long time, it's all about what treasuries are doing. And treasuries are also taking their cue from politics in the U.S. How does that develop in the coming weeks and months?
Thank you and good morning. I think what we're seeing is we have seen a pickup in interest rates, 10-year above the 1% level, and the yield curve has started to steepen. And there was a bit of an acceleration of those two trends on the back of, the Georgia win for the Democrats. So this idea of a blue wave, more fiscal stimulus, more spending. So I think we will keep an eye on interest rates, but for us right now, the level they are at, the steepness of the yield curve is not a cause for concern. It's actually maybe a cause for a bit more optimism that we could see a more profound recovery in the economy sooner if Biden gets his stimulus bills underway. So for us, it is something to watch, but not an immediate cause of concern now.
Is there a part of the market, Altaf, where valuations seem off or equities are running too hot?
You can't look at valuations in isolation, so it's definitely easy to look at historical graphs of valuations and say, look, we're near or above the peak that we saw even in the dot-com boom. But at the same time, rates weren't that low then. And when you look at the level of rates now and you factor that into equity valuations, we're actually at fairly reasonable levels. Earnings will have to come through. We can't have equity markets at these levels without earnings growing. But we're confident that that's going to happen, and we're still confident that risky assets, and in particular equities, are going to have a good year this year.
Ashraf, thrilled to have you on. Altaf, rather, thrilled to have you on. Thank you so much for joining. If you go back to your Oxford work in engineering, and you have to engineer an exit from all that we've wrought in 2020, what does it mean for stability in EMA through the transmission of a weak dollar? Do you see a stability to how we respond and react to all these dynamics, or do you just assume instabilities to come?
I mean, it would be great to have a stable exit from all this monetary and fiscal stimulus. Now, in history, generally, unfortunately, we've had bubbles exploding and bubbles popping, and that's been the way out. Now, the way to, as you say, engineer a more stable exit would be through strong signaling, which we are seeing from central banks much more than we've seen in the past. They say what they're going to do, and then they do it, and then they stick to it. We're going to have to see earnings coming through. As I said, we're going to have to see companies stepping up and making the most of these conditions and keeping their business models solid. And we're going to have to see a bit more nimbleness in terms of the labor market, in terms of moving labor from certain sectors of the economy, which we don't think are going to flourish going forward, into more profitable sectors of the economy. So a lot of things will have to line up, but it is possible to have a stable.
State to the doom clue now, really worried, forget about Bitcoin and that. State to the institutional market gloom crew why they're wrong and why we will see stability. How do we compensate within the EMA and the international system for all the shocks we're seeing, reduced GDP, reduced productivity in the pandemic?
Yeah, so to go back on the productivity, for example, what we will have to see, as I say, is a shift in terms of the way industries are financed and the way labor is supplied to those industries. So we've already started to see a profound shift in the way people are behaving, more online shopping, video streaming, and those effects, I think, are going to be long lasting. They're going to last far beyond, hopefully, when vaccinations are rolled out fully and we have some kind of herd immunity. So I think economies are going to shift profoundly. Sectors are going to change in terms of their focus. So that's one thing. And then in terms of, as I say, we do think that central banks, for better or for worse, have become less independent, have become more tied to the economy, and are working more hand in glove with the economy, so that we do have less of a chance of a bubble exploding and popping and more of a chance of a stable exit.
But Altaf, is there a part of the market or is there an industry where you are expecting actually people to go back to how we were pre-COVID?
I think it's really hard to point to many or any industries where that might happen. For example, travel and leisure, we think, is profoundly changed forever. You saw that in the payrolls report in the US last week. So we think there are some sectors that are potentially completely transformed and will change. Energy is another sector where that might happen. Financial services as well. So, the bellwether sectors of the economy, we think, are going to be changed forever. And it's hard to see or point to any sector, especially with the rise of ESG, which is transforming business models across sectors, which isn't going to be profoundly different to where it was, say, a year or a year and a half ago.
Altaf, thank you so much for the insight. Altaf Kassam there. State Street Global Advisors, EMEA Head of Investment Strategy and Research. Now let's get straight to the Bloomberg. First word news in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. House Speaker Nancy Pelosi is moving forward with plans for an impeachment vote this week. She says lawmakers will take up a resolution to impeach President Trump unless Vice President Pence and the cabinet use the 25th Amendment to remove him from office. Bloomberg's learned that privately, Pence has decided that's not feasible. The outgoing Capitol Police chief says House and Senate security officials hamstrung efforts to call in the National Guard last week. Stephen Sund says they took more than an hour to approve his request, even as rioters violently overran his forces. Sund has resigned, so have the two congressional security officials. In China, state-run media called for retaliation after the Trump administration removed restrictions on interactions with Taiwanese officials. It's one of the biggest moves yet to reshape U.S. links with Taiwan. The U.S. imposed the limits after officially recognizing China in 1979. The UK is ramping up its rollout of the coronavirus vaccine. 7 regional centres will open up this week at sports and conference centres. Health Secretary Matt Hancock says the UK is on course to meet its vaccine target. The goal is for 200,000 people to receive doses every day. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thank you so much. Now, coming up, we speak with James Bevan, CCLA Chief Investment Officer. We talk, of course, about treasuries, but we also talk about some of these social media companies, Twitter, Facebook, Google. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keen's in New York. Tom, to talk about the markets, we'll talk treasuries, of course, we'll talk equities and whether they're too hot at the moment, is James Bevan, CCLA Chief Investment Officer. But James, before we get on to maybe some of the valuations out there, I just want to ask you about social media companies. If this is a day of reckoning after what happened at the Capitol Hill last week, how will Facebook, how will Twitter, and how will Google change?
I think that Google, or Alphabet, its parent company, is relatively well placed. It has a diverse global business that is underpinned by strong free cash flow, and it's very easy to see how they monetize their worth. I'm much more concerned about the outlooks for Twitter and Facebook because I reasonably anticipate that there will be additional regulation. They will become increasingly accountable for the content that they carry on their services. And as a result, they will find it much more difficult to operate and much more difficult to monetize their traffic because more and more people say, do we really want to be associated with those names?
Will they be broken up?
I don't necessarily think that they will be broken up because if you want to break a company up, it's usually done on the basis that there is customer disadvantage and hence the antitrust movement. In contrast, I would suggest that none of those three companies represent, as they stand, an impairment of customer choice. But I do think that they will have far more regulation, as is the case with media companies generally.
James, in moments like this, when emotion runs high, there's a basic theory, a basic system of you buy it and you hold it. Discuss the confidence you have in holding equity securities this morning.
Well, Tom, as of today, I look at the valuations. We have the US S&P 500 on a forward multiple of 22.7 times. That, I think, is exceptionally rich, but it is at least less rich than the 25.9 times peak in 1999. So we're not at those levels. And I know that a lot of people talk about tech companies as the most overpriced part of the market. They're on a current multiple of 27 odd times earnings, but that compared with over 48 times earnings back in 99. Now, very interestingly, this time around, of course, we have a very low bond yield. So the bond yield a year ago was 1.9%. We know it is now just over 1%. I think it is deeply important that the bond yield has been rising from the trough of 0.5, and indeed it's up about 15 basis points from the beginning of the year. The bond markets clearly are now becoming concerned about valuation and the trajectory of behavior of central banks and governments generally. I'm therefore optimistic about equities, but I recognize the risks from both central banks and COVID-19.
James, even with the long-term view that you have, is, let's call it old conservative money, there's buy the rumors, sell the news. There's a lot of rumors right now. How does James Bevan buy the rumor right now? The collective rumor.
Well, I'm looking interestingly at free cash flow, and I would observe that the market has been remarkably undiscriminating between companies that are well structured for the long term and those that are essentially structured to take account of the advantages that are available today. I mean, you were talking a moment ago about Google and Alphabet. Interestingly, Domino's Pizza came to the market at the same time as Alphabet and has delivered superior share price performance. And that's because Domino's have geared their balance sheet, Alphabet has not. And I look at the long-term growth credentials of Alphabet relative to Domino's, and I'm absolutely backing the Alphabet story over the Domino's story. And therefore, when I think about what's going on, I absolutely am focused on quality. I think that if the world turns more hostile later this year, quality is going to be the one thing that stops prices sinking significantly.
You know, Fran, I got to say, this is a surveillance break exclusive. I never thought we'd be talking to James Bevan about a medium pepperoni Coca-Cola to go.
Yeah, please don't get me started on Domino's Pizza, Tom. Remember, I'm Italian, but this is another conversation for another time. James, when you look at elevated Treasury yields, how much higher can they go? And actually, how much of an impact will it have on your portfolio?
Well, interestingly, I try and work out what I think the fair yield on the US Treasury should be. And I look at the ratio of the copper price to the gold price. And the long-term relationship between those two metals suggests to me that the US 10-year Treasury yield should be 2% rather than just over 1%. And 2% is not an issue for me in terms of selecting excellent equities for the long term. Were we to see the bond yield rise to 3 or 4, then the mathematics of valuation would become much more demanding for equity. The weighted average cost of capital would go up, so corporations would be more stretched, and of course household balance sheets would become more stretched. So 3 or 4%, bad news, 2%, absolutely fine.
Okay, what needs to happen for them to get to 4 or 5%?
We would need to see a significant shift in policy by the Federal Reserve. Interestingly, the Federal Reserve has several different agendas that it says it wants to follow. It clearly has to worry about inflation, but it has indicated it is prepared to see inflation run above 2 for a period to compensate for the period that it ran below 2. Equally, it is keen to promote the strength of the US economy, and that also argues for low rates. However, were the dollar to become materially weaker, then one might reasonably expect that the Fed will not stand by and will take action, because a weaker dollar leads to higher imported goods prices that hits the relatively less well-off more. In addition, the Fed has published an expectation that it is interested in fairness in society. And I reasonably believe that a meeting of minds between Mr. Biden and Mr. Powell at the Federal Reserve could lead to the Fed shifting policy earlier than expected, driving up prices generally in the equity market, but most certainly underpinning this expectation that bond yields will rise.
James Bevan, thank you so much. And we will continue with Mr. Bevan. I'm really looking forward to that further conversation. Maybe we'll touch there on what to do away from technology towards mid and small caps. Later today on ESG, it is the Vogue. She's doing reality about it. Savita Subramanian, Bank of America, head of equity and quantitative strategy with a real bent to ESG. Futures -18. This is Bloomberg.
it's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
What do you think you would like to do when your term as Secretary of State is completed?
David, I think I've answered all your questions. I may kick this one. I don't know precisely what I'll do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Shares of Samsung Electronics rose the most in almost 10 months. Intel is considering asking the South Korean company and Taiwan Semiconductor to make some of its most sophisticated chips. That would be a major departure for Intel, which has been experiencing delays in its chip-making processes. KKR has raised $3.9 billion for its first Asia-Pacific infrastructure fund. It's the largest of its kind. 3 dozen investors put in money to be used for everything from waste management and renewable energy to communications towers. KKR and its employees contributed about $300 million. And the newly crowned richest person in the world is debating how to give away his fortune. Elon Musk went on Twitter for suggestions not longer after he surpassed Jeff Bezos to take the #1 spot in the Bloomberg Billionaires Index. He's now worth $209 billion. Musk has already signed the Giving Pledge, a promise by the ultra-wealthy to give away at least half their fortunes. And that is the Bloomberg Business Flash. Tom?
Ritika, thank you so much. Greatly appreciated. James Bevan's still with us with CCLA. James, you mentioned free cash flow earlier. I just had my heart skip, James, because I just wrote a banner for Bloomberg Surveillance on 2031. James, I've never looked at 2031. I know you haven't earlier. Frame investment now by utilizing and studying free cash flow and its various ratios out a decade.
I would say that the key challenge for free cash flow is going to be the extent to which companies are prepared to invest in order to secure additional productivity. We can square the circle on the valuation of US equities and the maintenance of low inflation if companies invest in order to secure superior growth. Having lived through the best part of a decade where 2% economic growth, real economic growth in the States, having in prior periods been described as stall speed, became the new normal. I'm optimistic that the US can go back to 3 percentage points of real growth on the back of productivity improvements. That suggests to me that free cash flow and free cash flow growth can continue to drive forward over the next decade. Right. And I'm optimistic that as long as we maintain exposure to secular growth, investors will be fine.
James, what's so important here is a concept of reversion in the mean. One of the great wrong calls of the last 10 years is single-digit equity growth. Do we revert back to the mean and go through that assumption, or do we revert back to the mean and level out with single-digit growth?
Well, Tom, when I think about the source of the idea of single-digit growth and why it has been violated, the principal challenge has been a consistent revaluation. So it's not that corporate earnings have driven the number into the double digits that we've experienced. It's been the ever-increasing valuation that investors have been prepared to pay to participate in the earnings and free cash flow that are available from the market. And that story has essentially completed. It is inappropriate to anticipate that we will get ever richer valuations. So I certainly think that we should be expecting single-digit equity returns for the medium term. But in the near term, I think that there is scope for the market to move higher. I think that if the optimism that pervades equity market participation at the moment persists, we could see 4,300 points for the S&P 500 this year. My concern is that if it comes too early, it will sow the seeds of its own destruction and be followed by a meltdown.
James, what do you do with emerging markets?
Keen on various parts of the emerging market continuum. Francine, I am of the view that the companies like Samsung Electronics that you referred to just a moment ago is very well placed, and its valuation coming out of the COVID-19 crisis was depressed. The positioning of the balance sheets of the Asian developing markets and their equities is, I think, very attractive. In contrast, I would be still quite nervous of emerging Europe and also Latin America.
James, is there anything, I mean, you talked about a possible meltdown. If you saw something uneasy in the markets that would warrant a huge correction, where would you see it first? What's the first indication of that?
The two risks I worry about are a shift in policy by central banks, and particularly the US Federal Reserve, leading to a shift up in cash rates and bond yields across the curve. And they don't actually need to change policy. They might even just make a statement saying that they are minded to change policy. And were we to see bond yields begin to move up, I think that some of the hot money in the equity markets would retreat, and that can then gather pace. The second issue, of course, is this dependency now on getting the growth to come through to justify the valuations. Were we to get a further acceleration in COVID-19 cases, the vaccination program that everybody is pinning hopes on fails in some way, then any risk to those growth numbers necessarily pulls the rug from underneath the equity valuation case as it stands today.
James, thank you so much. A wonderful briefing to get this interesting week, this interesting Monday started with CCLA and their Chief Investment Officer. Futures negative 18, Dow futures negative 173. Just to give back a subsidence off that challenging jobs report, maybe some of the central bank uncertainty through the week as well. The VIX turns around two big figures, 23.46 on the VIX. Yields, well, they were up a little bit, then they come in. I'm going to round it up, 1.11%. on the 10-year yield. Wow, that's an interesting number. Please stay with us. We do another hour of Bloomberg surveillance. Congressman Stevens from Detroit next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This morning, if it is Tuesday, it must be impeachment. Speaker Pelosi will, quote, act with urgency. If it is Tuesday, President Trump will go to the Alamo. No, not the Alamo, the on-the-border Alamo, 78516. Markets this morning, they churn. The dollar finds a bid. The 30-year bond in the vicinity of 2%. And nationwide, the arrests begin. The PGA will not golf at a Trump golf course. And, well, Arnold speaks of Nazi guilt and Crystal Nut, 1938. Good morning, everyone. Bloomberg surveillance from New York. Francine Lacroix in London. I'm Tom Keene in New York. And Francine, I just want to start as we begin this week with our Washington News Bureau, Craig Gordon, Kevin Cirilli, and all. They've worked right through the weekend. It is an historic moment, Francine, for the nation.
There certainly is, Tom, and I think as we look forward to the week that will be, two questions on that is, first, what will President Trump do? So there are a number of reports saying that he will remain defiant. He's going to Texas, I believe, tomorrow. What exactly does that mean and what shape that will take? And, of course, the second question is what kind of impeachment vote, if he gets one, what, the repercussions for that and, legal troubles ahead.
Reaffirmation last night from Speaker Pelosi, moving to Tuesday, of course, their 60 Minutes interview as well. We hope to have some of that for you here in a bit, but we'll be following this tick by tick through Monday again with our Washington team. With our first word news in New York City is Radhika Gupta.
Thanks, Tom. An ultimatum from House Speaker Nancy Pelosi. She says lawmakers will vote whether to impeach President Trump for the second time in less than 2 years, unless Vice President Pence and the cabinet invoke the 25th Amendment to remove him from office. Following the riots at the Capitol, Pelosi says the president represents an imminent threat. A preliminary vote could take place Tuesday. Bloomberg's learned that Pence has dismissed the idea of using the 25th Amendment. President Trump and his advisors plan a defiant final last week in office. He's expected to travel to Texas tomorrow to highlight what he believes is one of his biggest accomplishments, the wall his administration built on part of the border with Mexico. The president is also planning at least one more round of pardons. And some of the biggest names on Wall Street are pausing all political donations in the wake of the riots at the Capitol. Goldman Sachs, Morgan Stanley, Citigroup, and JP Morgan Chase have joined a growing list of companies changing or reviewing their donation policies. Goldman probably will curtail future giving to elected leaders who fought to overturn the 2020 election result. And shares of Twitter fell sharply. They were down more than 8% before paring some of the loss. On Friday, Twitter permanently banned President Trump's personal account for repeated rules violations. The president had more than 88 million followers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Radhika Gupta. This is Bloomberg. Tom.
Radhika, thanks so much. The story continues. Last night, Leslie Stahl of CBS with the Speaker of the House. Oh, let me do the data right now. I'm sorry. I was going to go to Speaker Pelosi, but let me do the data right now. Not all that much going on there. A churn after the jobs report, a little bit of a decline in the bid, 1.11%. Francine?
Yeah, Tom, I have a very similar data check to yours. I'm going to go very quickly just because there's concern about valuations. There's also concern that equities are now a little bit too hot up. And then, we saw some renewed price volatility, evoking memories of 2017. So that's the main question today. And of course, it's all about what's happening with treasuries as well. And finally, Bitcoin sliding as much as 20% over the last 2 days to as low as 32,289, Tom.
I had a limit order in at 50,000. I don't think we got there, Francine, but with my luck, that was filled. Right now, let us get to Leslie Stahl with Speaker Pelosi.
Shame on them, and shame on 2/3 of the Republican caucus in the House supporting those. So these people are enablers of the president's behavior. I remember when Republicans in the Senate went to see Richard Nixon and said, it's over. That's what has to happen now.
These interviews will be managed through Monday and into Tuesday as well. No one really talking about Wednesday. We need to get there. And certainly for our global audience, the former governor of California, Arnold Schwarzenegger, with clearly the meme of the weekend with his impassioned speech about his Austria from another time in place. Right now, our executive managing editor, Marty Schenker, joins us here on an historic week past and an historic week to come. Marty, an open question to get started. What are you and your team watching for this Monday?
Well, obviously, it's the process of impeachment and the 25th Amendment. I think that Mike Pence is not going to answer that in a positive way, Pelosi's call for the 25th Amendment, and that will get an impeachment vote on Wednesday, and it will succeed.
A single image I saw this weekend that was so upsetting was a vertical image coming down on the body of a fallen Capitol officer surrounded by the rabble. Those are the images and the emotion of these politicians. How much for these politicians, Democrat and Republican, is sheer emotion versus rational thought?
Well, as I said last week, once the shock of the event was absorbed, it moved to anger, the stage of anger. And certainly the Democrats are very angry. I mean, they've been battling this president for 4 years, and they feel that the Republicans have enabled his actions. There are angry Republicans, but they're not enough probably to convict him in any Senate trial. So what you're going to have is essentially a symbolic gesture. And they know for Donald Trump, being the only president to be impeached twice is not something he will look on favorably.
Marty, what would be the reasons for the Democrats not to push for impeachment right now, 9 days before his term is over?
Well, as we and others have observed, Joe Biden has a very aggressive agenda in the Senate. And if there is an impeachment trial in the Senate, they can do no other work. So his nominees don't get confirmed. His stimulus plan doesn't get adopted. So there's the issue of Joe Biden wanting to hit the ground running, especially on COVID, when you have a Congress basically completely absorbed by impeachment.
Marty, what's the difference between a president being impeached or, a president finishing his term and then being caught up in all legal issues?
Well, I mean, impeachment, if he is convicted, means he cannot serve as president or any federal public office again. So I think it's more than just symbolism if it comes to pass. But obviously, what the nature of Donald Trump's political movement is after he leaves office is something we're all going to be watching for, and his removal from social media is going to make it a real challenge for him.
Marty, the blunt instrument here is the power vacuum. Mike Allen features that in Axios this morning. I mean, we all get it. Republican House, Democratic House, Democratic Senate, Democratic President. I mean, that's just the overwhelming fact right now.
That's right. And it's very hard to see how the Republican Party reconstitutes itself in a way that ever could possibly be in the majority. When some people say there are now 3 parties in the United States: the Democrats, the traditional conservative Republicans, and the Trump Republicans. Those 2 Republican sides do not make a majority of the United States.
What's so important here, Marty, folks, you could literally rip up the script and go on with this with Mr. Schenker for like 3 hours. We're not going to do that because he's got to get to his breakfast. But Marty, what is so important here is this is not H. Ross Perot or somebody else running as a third party. This is almost a movement. What's the history of movements coalescing to being in the voting booth for any given presidential election?
Well, the fact is the Republican Party basically was a movement.
Was a movement in 1853.
It was an anti-slavery movement, and it became a political party. Now, whether Donald Trump's base ever becomes that formalized as a political party may be something he's thinking about when he leaves office, but it all remains to be seen.
Marty, what is President Trump going to do in the next 9 days? So when a lot of our reporting team says he will be defiant, what can we actually imagine?
Well, defiant is an interesting word. Is it defiant to just basically be quiet and stay in office? He obviously gives no indication at all he's going to resign, and there's no indication at all that the cabinet is going to remove him, and there's no timing issue. There's no way, given the timing, that he can be convicted in the Senate. So he's going to stay in office until the day before Inauguration Day and then fly down to Florida. I think he will tone it down, and obviously not being on Twitter gives the impression of toning it down. So and I think he's been chastened by the events of the past week, and his rhetoric will reflect that.
Marty Schenker, thank you so much. Greatly appreciated. I do want to note CNN reporting, as well as the Washington Post, that William J. Burns has been nominated by, or will be nominated rather, by President-elect Biden to run the CIA. He is truly one of our esteemed diplomats, someone that we've spoken to many times before. Speaking of diplomats, there's the diplomatic politics of the state of Michigan in a purple district outside Detroit. Haley Stevens is a most interesting congresswoman. We'll speak to her next. This is Bloomberg Good Morning Futures, -19.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. We are framing the global political economics, some central bank meetings that Francine talked about as well. But of course, all eyes on Washington. And the prism is the certitude of a Republican district or Republican state, or the vice, the Democratic district, the Democratic state. And then there's a sprawl of the growing purple states across this nation. Haley Stevens is a congresswoman from Michigan and is in one of those districts where it's 55-45, 52-48. There is a source of opinion in her 11th congressional district. Outside Detroit, think Oakland. Haley, tell me right now the balance that you have in your district, the emotion that you have, given the unique framework of your constituents.
Well, certainly we've got a lot of independents, and we've got a lot of Republicans and a lot of Democrats as well. Traditionally, this district has voted for Mitt Romney. It voted for President Trump in 2016, flipped in 20, flipped in 18, elected me first Democrat in half a century.
Well, okay, first Democrat in half a century, but you have to deal in Washington with the emotions of your capital. Your tweet was hugely emotional as those events went on. You also got to deal with your constituents. Tell me the balance of that through the weekend and into this week, how you balance the two.
Well, certainly I've been keeping up with my constituents, and what I've heard resoundingly, in particular from that independent crowd, is that there needs to be some sort of retribution to what happened, some sort of reining in of the president. Certainly you saw this statement from the National Association of Manufacturers that represents a lot of people in my district, a lot of companies in my district, and they said invoke the 25th Amendment. If you look at what Congress is going to do today, we're going to put in place a legislative motion to get the vice president to consider invoking the 25th Amendment. If he doesn't do so, that's where you'll see impeachment kick in. And look, impeachment's largely seen as political, but this is about the Constitution. This is about the oath that we took. This is about, that statement, high crimes and misdemeanors, and making sure that we can have good, stable government. I think anybody watching today, particularly those of you in the business sector, knows that a corporate board would never stand for this type of behavior, never stand for this type of tweets, never stand for someone, potentially breaking the law in the way that our president has.
But Representative, how much of a distraction would impeachment be in the first 100 days of a Joe Biden presidency where he needs to get on with policy?
Yeah, look, that's an imperative of mine. Get the Build Back Better agenda in place. The president-elect is rolling out some very inspiring policy, particularly for our small businesses, vaccine distribution, economic development. We don't want to lose sight of that. And we do know that impeachment takes a lot of time. We certainly are aware of that, particularly once it leaves the House and moves into the Senate for a trial. Unfortunately, I've already lived through this once, and so I am familiar with that. But at this point, I don't see any other course. And I think if you're on any other side of the aisle, unless you're hyper political, you're looking at this, you're looking at the oath that you took, and realize these are the mechanisms we've got to pursue here.
How much do social media companies need to be regulated?
Tremendously. Look, I'm on the Science, Space, and Technology Committee, and we're not in a regulatory role here, but we certainly looked at the nefarious activities of artificial intelligence gone awry, deep fake videos just as a start. And one of the things as a millennial member of Congress is that we haven't even touched reining in big tech. I've been on the phone with people in industry who have even said, hey, we need you guys. Put in some place, some boundaries, some measures here so that we don't see an internet going out of control with conspiracy theories, threats, domestic terrorist threats. I mean, some of this is obviously very much from within. That's what we saw with the uprising and the insurgency on Capitol Hill.
Congresswoman, you are living a third party. Your vote, 50.2%, the other team, 47.8%. And the Libertarians, 2.0%. You're living what people are predicting. Can this nation have a third party represented either by President Trump or whoever follows along?
It's something I've long pondered, and I don't think you're far off from asking that. You see this Lincoln Project entity breaking. You see in Michigan, we have 7 Democrats at the House level serving in Congress, 7 Republicans. In the last 3 years, 2 of the 7 Republicans from Michigan who are no longer in Congress, they left in 116, now we're in 117, but 2 out of the 7 have left the Republican Party. Where are they going to go? What party are they in? So I do think you're onto something with that.
This is really important. Let's rip up the script, Congresswoman. I mean, do they go to Democrats or is there a new independent sense? Does Washington go Angus King? Let me put it that way.
Yeah, Angus King is certainly an interesting independent, as is Bernie Sanders, right, who's run for the Democratic nomination. Lisa Murkowski from from Alaska saying, I'm deeply questioning if I'm a Republican, if this party is really representative of my views. Two of the president's cabinet members. So look, I'm not privy to those conversations, but what I am privy to is look at a Democrat like me. I'm pro-business. I was endorsed by the U.S. Chamber of Commerce. I actually got the president to sign 2 of my bills. I had just as many Republicans on the other side of the aisle in Congress congratulate me on winning my reelection as I did Democrats. And that's partly right, the get stuff done, fiscal responsibility, tackle our debt. I talk about those things. I work on those things. And I certainly look at and work very closely on the economic growth agendas, working very closely with my manufacturers here in Michigan. So whatever happens with this rupturing in the Republican Party, come on over to the Democratic side. We'd love to have you.
Representative, Stephanie Baker, a reporter, reminded me that the FBI had successfully, of course, fended off the attack on the Michigan governor. What happened this time? Did they drop the ball on some of these far-right groups?
I think that there was a planned attack. We've seen this with the way in which the individuals who broke into the Capitol and knew exactly where to go in a very confusing and complex building, breaking into our speaker's office, breaking into our majority whip's office, leaving with materials and goods such as laptops. And so I do think this was coordinated and potentially not, not identified in time and certainly not thwarted in time. And fortunately, no member of Congress was physically harmed. Unfortunately, 5 people lost their lives that day, and another officer lost his life to suicide the following day. Another Capitol Police officer lost his life to suicide that day. So it was a dark day in America, and it was absolutely a breach of national security.
Congresswoman, thank you so much. From the 11th Congressional District, Michigan, outside Detroit, Haley Stevens joins us this morning, the Democrat. Futures negative 21, Dow futures a negative 193. I'm going to call it a churn to the market. It's got that after the jobs report feel to it. The big surprise over the last 3 days, dollar strength, short cover. I'll let you say that. Somebody else can say that. All I know is yen 102, 103. I've got a 104.14 yen right now. On the equity markets with a really wonderful acuity on quantifying ESGs. Savita Subramanian, Bank of America. Look for that in the 9 o'clock hour.
Typical clothes wash, up to 700,000 fibres could come off our clothes.
permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc, une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles, et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg surveillance. Good morning from London, from New York. Futures at negative 21, Dow futures at negative 192. Francine, this is to me somewhat of a surprise from President-elect Biden that William J. Burns will run CIA. Francine, 2 years ago, his book, The Back Channel, was hugely successful. I mean, this is a guy with decades of experience who wandered out with truly a best-selling book out of nowhere 2 years ago.
Yeah, of course, Ambassador Burns, a career diplomat who served, I think, in the U.S. Foreign Service for around 33 years. So we'll see exactly some of the other appointments that go. But this, just the latest being actually, this was a Bloomberg scoop that then just got validated by the Biden administration. The markets look on to equities, wondering whether they're a bit heated. Tom, they also look at valuations across the board. I know you and I want to talk about Bitcoin. We saw a correction of around 20% in less than 48 hours, currently 34,981. Coming up next, Jennifer Lee, BMO senior economist.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance, good Monday morning to you. Francine Lacroix in London and Tom Keene in New York. Let's do a little economics now within the political economics of the moment. How about a single best chart? This came up. Thank you, Julia Coronado, for wisdom on Friday on what economists look at to get the pulse of a nation, the core of our labor market, 25 to 54, everybody all in, labor participation. From the financial crisis, down, a worser number, and that wonderful recovery we've seen over the last number of years, back to normal, and it has evaporated, a lesser core employment. Jennifer Lee joins us right now, BMO Capital Markets, as we talk about the labor report. It is a nation, Jennifer, flat on its labor back. What's the real unemployment rate?
I'm going to stick with the, good morning, everyone, by the way. I'm going to stick with the basic unemployment rate of 6.7%. But of course, we've got the one that the all-in unemployment rate, which is obviously a little bit higher. I think we should focus on the fact that we have made improvements over the course of this past year during the pandemic. And of course, it's going to be always one of those 2 steps forward, 1 step back scenarios, and that's what we already saw, obviously, this past Friday.
The zeitgeist over the weekend in economics was that we will see a good, a better, and above average labor recovery in 2021. Do you agree?
I think we will. A lot of the, there's been so much pullback, cooling activity, I guess, this year with a lot of people obviously working from home like most of us are. And you have a lot of those who have had to leave the labor force, hopefully temporarily because of either illness, dealing with other issues at home like childcare, that sort of thing. So that's why we've seen a bit of a drop, I guess, in the participation rate overall. But once things improve and once demand returns, we do believe that the labor market will be returning back to, a healthier level.
Jennifer, good morning from London as well. What kind of scarring are we going to see in the U.S. economy because of COVID-19?
I don't know how much scarring there's going to be now. I'm just going to focus a little bit on what we were seeing on Friday with the jobs report. Obviously the big focus was on the somewhat surprising 140,000 drop in non-farm payroll, the biggest and the first since the pandemic began. But if we look closer, I was quite surprised to see and heartened, I would say, to look at the report on an industry basis, because all of the decline was, all the focus or all the decline was on about the 500,000 drop in the leisure and the hospitality sectors. And it was fascinating how all the other sectors, or most of them, were all still chalking in some pretty decent gains overall. So once again, once this thing passes, whenever that's going to be over the next few months or so, and demand returns, we should start seeing the labor market improve and hopefully minimal scarring.
What happens to a lot of the female participants seem to have taken the brunt of some of these unemployment figures. Does that readjust itself as people get vaccinated and work picks up? I think the reality of it is that the pandemic basically exposed some of this unevenness, I guess, the inequality, I guess, we've been seeing in society, and with the female participation rate of the people dropping out the labor force. And again, this is due to dealing with childcare issues and having everyone, a lot of kids working from home, or doing online schooling like my two are right now. So that's the difficult part. And of course, once this thing returns, it gets out of our hair and demand returns to normal, and everyone hopefully goes back to the office, maybe not on a regular basis as we were used to before the pandemic hit. This should be correcting itself, but it's going to take some time.
Do you envision a vector of economic growth that gets us back to level, or gets us back to trend that eventually gets us back to above level, to the vector we knew before?
I think it's going to take time. It's not, I don't know if it's going to be getting back to the level. It's how long it's going to take to get back to that level. And, you know, we could be surprised. I mean, right now there's obviously a lot of negative news that's you know, coursing through the veins of the economy right now. But, you know, once things, again, return, you know, once once we've got everyone vaccinated, or we get some sort of a herd immunity play out, you know, then we're going to start talking about when we're going to head back to pre-pandemic levels, you know, and that could actually be surprisingly faster than many expect, you know, but I think the base case scenario is sometime towards the end of this year.
I've been talking about the pandemic partition. What did you glean in the jobs report of the pandemic partition, the new inequality?
Again, as I just said earlier, I mean, I think this whole pandemic just exposed how, you know, how you know, all the different parts of the inequality that was playing out throughout society. Yeah. And, you know, that's going to be that's what is catching a lot of this attention. It's just coming up to the forefront, and this is why, you know, the Federal Reserve, for example, or, you know, no one should be expecting them to tighten anytime too quickly, or you know, they're not going to pull the punch bowl away too quickly. I think this is going to keep, because of all this, they're going to keep, you know, interest rates low for longer, and we're not going to see any major changes in interest rates, at least for the next couple of years.
Jennifer, are we going to see inflation in 2021 in the U.S.? We're
already started seeing a little bit bubble up. Whether or not this is going to be sustained is another story, but I think, you know, we've been saying that inflation will stay low, but it's not going to stay at such low levels as what we saw, you know, over the past 6 months or so. Things are starting to improve. We've gotten past that first wave. Now we're in the second wave, which is showing that it's not hitting the economy as badly as it did earlier in March. So we are starting to see inflation pick up a little bit. We're starting to see some supply shortages because of either shortages in the goods themselves, or because of the people that are making them. You know, you hear a lot about labor shortages these days for various reasons. So we are starting to see inflation pick up a little bit. I don't think it's going to be rising too quickly. Again, just like with interest rates, I think they're going to stay. They're going to start increasing at probably a more of a modest pace.
Great. Thank you so much for all of the insight. Jennifer Lee there, BMO senior economist. Now let's get straight to the Bloomberg. First word news in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. House Speaker Nancy Pelosi is moving forward with plans for an impeachment vote this week. She says lawmakers will take up a resolution to impeach President Trump unless Vice President Pence and the cabinet use the 25th Amendment to remove him from office. Bloomberg's learned that privately, Pence has decided that's not feasible. President-elect Biden has named career diplomat William Burns to head the CIA. Burns is the president of the Carnegie Endowment for International Peace. He would be the first career diplomat to serve as CIA director. In China, state-run media called for retaliation after the Trump administration removed restrictions on interactions with Taiwanese officials. It's one of the biggest moves yet to reshape U.S. links with Taiwan. The U.S. imposed the limits after officially recognizing China in 1979. The UK is ramping up its rollout of the coronavirus vaccine. 7 regional centres will open up this week at sports and conference centres. Health Secretary Matt Hancock says the UK is on course to meet its vaccine target. The goal is for 200,000 people to receive doses every day. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, later today, the IEA Executive Director, Fatih Birol, will talk about the OPEC decision. We'll also talk about what happens to Brent given all the climate change concerns. That's at 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg.
have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Surveillance, we welcome all of you worldwide and across this nation. Tom Keene in New York, Francine Lacroix in London. There are many tech angles to what we've seen the last number of days on Washington, on an insurrection, as it was reported at Capitol Hill. Alex Webb of Bloomberg Opinion now joins on the insurrection in technology. Alex, not on the obvious, not on Twitter, not on Facebook, but are you surprised that the companies of infrastructure, the companies of process and technology, are voicing their opinion, like Stripe and like Amazon's cloud service, AWS?
It is certainly something that we've not really seen before. I think it does seem to be the right decision to take. You know, there are, of course, economic considerations for what they're doing here. They're a bit, if these things are unsettling, the democratic process, then that has a risk for their business as well. And so taking these steps it seems like the right move to make from a sort of public relations perspective, but also has implications for the stability of their ability to do business.
What do you see as the legal framework to push against Jeff Bezos and others who are not talking about First Amendment issues, but are talking about taking away what is so dominant in our lives through tech infrastructure?
I'm not a lawyer, but I'm not sure there is one. These are private companies. They can host what they want on their platforms. It's interesting, this whole, clearly the First Amendment argument. It's much the same. When you think about it, the Simon & Schuster deciding not to publish Josh Hawley's book, they're a private company. They can decide to publish what they want. Same holds for cloud services. They can decide what to host or not on those services, depending on what they think is appropriate.
Alex, they're a private company, but they speak to billions and billions of people. Will they actually get regulated? So are they becoming a publishing company? And so will they have stringent rules? Or will regulators across the world try and break them up or do something so that you stop this misinformation?
I think they absolutely are publishers. I don't think there's been huge doubts in that for a long time. This does formalize that view. The question is, if they are publishers, does that mean they're regulated a little bit differently? Well, there's a huge amount of discussion about Article 230 right now, which protects online platforms to an extent. Equally, are publishers regulated significantly differently in the US when the US doesn't have a formalized term for hate speech as we do in Europe. So the fact that they are confirming the suspicion they are publishers, it might tip the political discussion a little bit, but I think that we're already a long way down this path, and I'm not sure it substantively changes anything.
Well, I look, Alex, at where we go. What do you expect to be the next step away from infrastructure back over to social media? What are you going to look for this week, or for that matter, what are you going to look for this Monday in San Francisco?
I think it'll be interesting to see who else they crack down on. Clearly, Trump himself has been, the cheerleader for so much of this. But there is a whole ecosystem built up around him and around his particular strand of rhetoric that, fans the flames, or perhaps even creates the conditions for him to fan the flames. And if they are serious about removing this sort of content and preventing the sort of radicalization that can happen on social media, then a lot more needs to be done. I think there's a lot to be said for potentially allowing these more extreme discussions to go to, the fringes of the internet, to places like Parler and Gab. And that means they sort of exist in their own atomized little bubble and leave the people with more moderate viewpoints to keep those in the center and not be radicalized by content which we've seen time and again. It can often be the effect of places like Facebook, Twitter, and YouTube.
Alex, of course, we hear from various corners that Donald Trump, once no longer president, wants to focus on media and possibly a media empire. Could he create a social media platform that serves his use?
I mean, there's nothing stopping him from creating such a platform. We've seen, of course, now that Apple and Google on the App Store are playing the role of gatekeepers in terms of ensuring that radicalization or tools for radicalization are not readily available. It is not easy to build an audience, on these things. We've seen plenty of challenges to Facebook and Google over the years. Very few have been successful. Even with the rise of TikTok, Facebook continues to be the dominant social media platform. Is there scope for him to make some money and create a little niche? Possibly, but scale is really important here to think about network effects. Single topic social networks don't tend to be very successful. Social network, it thrives on having a multitude of different sources, of different viewpoints, frankly, even if within those some content bubbles start to emerge. So I think there's absolutely scope for him to create such a platform. Whether it proves to be successful, I'm very doubtful.
Thank you so much. Alex Webb there of Bloomberg Opinion, who, of course, covers technology for us. Now, coming up next, Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean, and we continue talking about vaccinations and COVID-19. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19, and Johns Hopkins has been at the forefront of the international response. Every day, we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us now is Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. Dr. Sharfstein, thank you for joining us. I mean, we talk about, of course, COVID-19, how difficult is it for European leaders to get a handle on it. Are states in the U.S. doing any better?
We're having a lot of trouble getting vaccine to the people who need it right now in the United States. I think they've delivered about 6 million doses out of 22 million that are available. And it really sheds light on how important it is to get the basic, rollout right and get as many people who need the vaccine vaccinated, so we're not holding on to vaccine that could be being used to save lives.
What is the right way of distributing vaccines? Does it need to be orchestrated at a federal level?
I think there's some aspects of it that could use a lot more federal coordination, and then some aspects of it that really need resources at the local level. Part of the campaign needs to be a volume strategy, really being able to find people so that vaccine doesn't go unused. And that can be partly through pharmacies, it can be partly through mass vaccination centers, very clear rules for who should show up, and being able to do that efficiently day after day after day. But if that all you do is just wait for people to come in, you're missing the people who really need to be vaccinated who might not come in. And so in parallel to that, there should be a local effort, well-funded, to go out to senior housing, to high-risk workplaces, and vaccinate people on the spot. So I would really like to see a strong mobile effort complementing the volume strategy.
What's the hardest thing to do in these vaccination campaigns? Is it distribution? Is it, as you say, finding the right people and get in contact with them? Or is it, choosing whether you need a first dose and then a second dose 12 weeks after or before?
It's a lot of logistics. It's really a lot, because it's both the logistics of shipping the vaccine in these big containers, to figuring out how they'll get split up, to actually setting up the sites, to finding the staff for it. I don't think there's one potential rate limiting step. There are probably 5 or 6. And so it requires really a strong implementation operation. And, I could imagine, though, that this will get better, that as these pieces fall into place, that we'll be able to set up vaccine centers, the pharmacies will do more. There'll be kind of a template for mobile operations, and teams can form and get vaccine. It's just a big challenge to get it set up.
Do we risk having new mutant variants because we're vaccinating with numbers going up?
Well, that is the virus is always mutating. That's what RNA viruses apparently do. They're not that efficient in their reproduction, so you're constantly seeing mutations. And obviously, we would not like to see mutations that compromise vaccination. Although the way that these vaccines are designed, it makes it pretty unlikely for that to happen. I think right now we really should be focusing on this implementation challenge. Obviously, there have been some planning opportunities missed so far in the United States and probably elsewhere, but it's like an all-hands-on-deck moment for public health.
Do people want to get vaccinated, or are you still hearing about many, a big percentage of the population pushing back against it?
I would say that people fall into 3 groups. You have people who really want to get vaccinated. They're the ones you see the pictures of, like sleeping out outside the pharmacies, thinking that maybe they can get vaccinated in the morning.